All right. Good morning, ladies and gentlemen. Good morning and welcome, and I hope you're doing well. How's everybody feeling today? Can you hear me okay? Sound check. Check, baby. One, two. We all good? Can you guys hear me? Nobody? Somebody? Anybody? Awesome. Whew. Thank goodness. Made me nervous. Don't want to say smart stuff and lose you guys. How's everyone doing today? Good morning, Miss Adriana. Nice to see you. Or at least see your typing, I suppose, right? As far as I can tell, you're just a pink game controller. All right, guys, let's have some fun today. Let's talk about patterns today. Let's talk about rules today. And then I had an epiphany, which means that you guys have to bear with me as I talk through it. And my epiphany was that people tend to learn parts rather than the whole. And then once we convince ourselves that we understand something, we tend to not review it. And I just had this realization this morning, and I'll get more into it before we go. Good morning, Cav. Good morning, Grant. It's good to see you. Um, and I see this because there's a lot of concepts that I talk about every day. There's a lot of concepts that I bring to the table each and every day. Good morning, Roku. And it's interesting to me that the same people that are in here every day, not everybody gets it at the same time. And it's kind of cool the way the human brain works. Is I can say something to 100 people. And the first time I say it, 20 of you might grasp it. And the second time I say it, 10 of you might grasp it. And it continues on that plane. Convenient learning is exactly what it is. And I had a buddy of mine send me a pretty cool video. And let me see if I can find it. I'll pull that off of here just so that you guys don't have to look at all my stuff. But I'm going to try and find the link, and it was on Instagram, so I don't know if it's available anywhere else. But if you get a second, feel free to watch this link if you have Instagram. If you don't, that's okay. And Grant, I'm the same way, to be honest with you. I'm exactly the same way. It takes me, I'll hear something and then I'll practice it. And then what happens is I practice it wrong or I miss one key element. And this is just from my own learning. And then, yeah, and then it hits. And Ron, I think that that's a very true thing is to have expectations that anybody's going to be good at something the first time out, guys. It's not fair. It's not fair to you. It's not fair to me. And you have to understand that you're going to hear the same thing over and over. And that's why I repeat the first hour over and over. And I want to tell you guys too, JW, that when you ask a question about the reversal bar marker, it opens the door for an amazing lesson today. And when I see a trade where you call a 50-50 trade a clear path, it opens the door for an amazing lesson. So, yeah, Ron, I did too. I got in trouble in class because I would draw during lectures. It was the only way that I could concentrate on what was being said, as if I took half my brain and drew pictures on paper. And it was the craziest thing. And if I don't scribble while someone is talking, I retain virtually nothing. I go into full daydream mode. It used to really upset the vice president of the company that I worked for because we would be in a meeting and I would be drawing stuff on the side of the handout that they gave us. And we had a pretty good talk about that. So guys, learn the way you learn. And if there's something that I can do to help you learn, if you have something that helps you learn, make sure that you let me know. But let's talk about advantages, guys, and let's talk about patterns, and let's talk about statistical advantages. And yeah, and Ron, you're absolutely right. My oldest son is high functioning, and if he wants to learn it, he learns it verbatim 100%. If he's not interested, he checks out, or if he's got something else on his mind, completely checks out. So, all right, here we go. Today is Thursday, March 14th, coming up on St. Patty's Day for you guys that want to pretend to be Irish. But at Thursday, the 14th, guys, we had All this news at 8:30. All this news at 8:30. He has, Ron. He definitely has. And if you were watching the market, it bumped a little bit, didn't it? I went and cooked breakfast, but I came back and that market had a pretty good spike at 8:30. Somebody reacted to that news. Guys, I don't react to the news. I don't trade. If core PPI is great, or the retail sales M&Ms are awesome, or unemployment is positive, guys, I don't react to that. What I do is I roll my chair away from my desk and I let the other people react to it. I let the guys that have fund managers behind them react to it. The guys with millions of dollars trading the market react to it. And I just let them do their thing. And then when it settles down, I come in and I take advantage. And that's kind of what we do every day. Everything that I talk about will come from the tutorial section on the education page, guys. There's also the software user guys. So for my newer users, don't sit and wonder, right? If you have a question about NinjaTrader, I want you to drop it in the room and I want you to say, hey, Mark, how do I do this? Where do I find this? How am I supposed to make this work? But if I'm not here for some reason, maybe it's after class, maybe it's the middle of the night, you wake up and you're wondering, the software user guide is your NinjaTrader how-to. It really is, and it'll walk you through anything and everything that you need on NinjaTrader. And then, of course, if you're still having problems and there's technical problems, I've got Jason in tech, who's absolutely unbelievable. And then the tutorial section, there are no secrets. There are no secrets. I can't stress that enough, guys. I'm going to give you everything that I have. The things that I use in my own trading that help me, I'm going to give it to you. The patterns that repeat themselves, that win more than they lose, I'm going to give it to you. I'm going to teach you how to recognize it. I'm going to give you a solid plan for it. And I'm going to give you feedback on everything that you do. That's my promise to you. The only time I don't know if you need help is if you don't ask me for help. So I want you to get to the point where you're like, yeah, the smart guy's okay. You know what? I can show him pictures. I can ask him questions. And he's not going to make my phone ring and call me a dummy behind the scenes. Because I wouldn't do that. Because, guys, I make mistakes every day just like you do. It happens. I posted a picture today, a mistake I made. I got in too quickly against the momentum phase. Stopped me out. Had to take the trade twice. It happens sometimes. But the one thing I want to show you guys is the glossary of common terms. And this is pretty cool. Grant asked a question today. Hey, Mark, what's that white line? It's a reversal bar marker. And I stole this picture and I gave it to him. And a lot of the things that you're going to see on your charts are defined. So what's cool is if you are brand new, just scroll through it and click on each example, right? What's a one-to-one? What's a small swing one-to-one? What is divergence? How do we get that? Reversal bar markers. What's a runner? A runner is when you just hold that thing forever because your charts tell you to. That's a pretty cool definition. It's nice when you catch those too. Fear of missing out. Happy but never satisfied syndrome. Guys, if you've never met my brother, this is my brother. He is always looking for a better way, an easier way, a way to give you guys a bigger advantage. And even when you learn a trade that typically wins 70 to 80% of the time, most of us are happy, but we're not satisfied. We want more. And that's kind of what has driven Nexgen for 27 years, is to figure out a way to make it easier and easier and easier. But the definition that I want you to focus on for this first hour, guys, is a high probability trade. And I want you to do this for a couple reasons. The first reason is that this is a trade where each indicator on every chart agrees for the trade, where your triggers are the strongest. There's nothing in the way between you and your targets. Guys, life is amazing when you take high probability trend trades, and it tends to be pretty easy. This is the one that creates confidence for the new users, but most importantly, the thing that this high probability trend trade does, and this is my move over to the slideshow, is it's going to make you a chart reader. And I can't overstate the importance of becoming a chart reader. I can't stress enough how important it is that you learn to read your indicators, because once you're a chart reader, guys, everything else just kind of falls into place. Everything else it works. Because chart reading is 90% of your day. Chart reading is 90% just waiting for advantages to come together, and then when they do, you're going to trade. Guys, I'm well over my goal for the day, and I spent maybe a total of 4 to 5 minutes in the market to get there. But I've been watching it since 6 a.m. Eastern. So in 2.5 hours and 3 hours, 5 minutes of that was actually spent trading. The rest of it was waiting for advantages. And it paid handsomely, which is kind of nice. So chart reading, guys, is going to let you know when the advantages are present. Chart reading is what sets you up to take trades. And when you're good at it, when you take a little time and you get there, you're going to understand where the market is likely to continue. This becomes your entries in the beginning for the highest probability trend trades that you can take. You will understand where the market is likely to go. This is going to allow you to put your profit targets in the correct spot. And then you're going to understand where the market is likely to stop. This does a couple things. If you know the market is likely to stop, it's an outstanding place to take profits. If you know that that's where the market is likely to stop, well, then you know not to take a trade into that area. And then finally, for the highest probability trend trade that you can take, Andy, yes, the recorders are going for you. Let me know what time you need to leave, and I'll make sure that I get your chart analyzed before you walk out the door. I don't mind doing that at all. And guys, if you ever have to get to a meeting, teach a class, perform surgery, go to court, whatever, let me know and I'll take a look at your charts before you head out. But understanding where the market is likely to stop is probably one of the biggest things that you can do as a chart reader, because it keeps you from trading into areas where things may reverse. And it also behaves as an anchor, or these termination conditions, for the highest probability trend trade that you can take. So spending 20, 30 days, guys, it's not a long time. Learn to read your charts. Learn to take the information that your indicators are giving you. And then if your indicators say that it's time to take a trade, well, then take a trade. It's the process that yields results. The first thing that we are going to focus on is trade entry precision. Jaws are going to hit the floor, guys, because you're going to be able to recognize low and high. You're going to be able to buy low and sell high through a simple series of understanding advantages and then refining them down to the point where the market is most likely to continue. And then once you're good at entries, guys, the cool thing is you got to learn to manage it, right? Management requires you to be a chart reader. Management requires you to understand what your indicators are telling you. And that's where you're going to use those likely to go spots for profits. And you're going to use likely to stop areas to not try to hold for the bigger move. But management is a whole different can of worms. And it takes the ability to read charts to do it effectively. So I'm going to tell you guys, without hesitation or reservation, that the step-by-step path to becoming a confident trader ASAP is heavily reliant on your willingness to post in the room. It is heavily reliant on your ability to make yourself a little bit vulnerable and put your stuff out there for critique, guys, because every time you post in the room, it's the equivalent of getting a private session with me. It's you saying, hey, Mark, this is what I did, and this is what I saw, and this is why I did it. Can you help me with my chart read? Is there something that I can do better? And guys, the cool thing is I also love to celebrate victories. So when you do something well, man, we're going to point it out. We're going to talk about these things that are great. We're going to talk about these things that may have been problematic. But that's very heavily dependent on you telling me, what did you see? Why did you do what you did? And that way I can see how you're reading charts and we can talk about how you can do it better. The second thing is use that spreadsheet that Nexgen gave you, guys. It's in your Nexgen study picks folder. You can download it from the tutorial section. I'm just dropping it in the classroom right now. Please feel free to steal mine. But your spreadsheet, guys, is one of the most overlooked and underutilized tools. And this is the key to recognition. This is the key to being able to see the market in the moment, because you're going to get in the habit of capturing these moments where you can take a picture and then go back and study it. And that's what the first page is. The first page is your trade journal. Every time you take a trade, every time you get in, every time you get out, you're going to put it in here and you're going to talk about how you felt and what you saw and what was going on. And then any feedback that you get, make sure that you drop it in there as well. because every morning you're going to study the previous day's trades. Every morning you're going to talk about what worked and what didn't work and what felt easy and what kept you relaxed and what felt forced. In this little 5 minutes, guys, this little 5 minutes each morning is going to prepare you for the day and accelerate the learning. And I'm going to tell you that this morning, this process paid huge dividends for me. I work with my brother on the sidelines a lot, and we do a lot of outside of what we teach in the class training, making sure that plans are solid. And he's been working on something for about a month, and it typically takes me 3 weeks to get on board with what he's doing because he is happy but never satisfied. But yesterday, I used Good Morning, Miss Cindy. I used this new method that that he's teaching me, or it's just an additional chart, and I misused it horribly. I traded it with a bunch of half truths, and I made money yesterday, but I didn't make it like I'm accustomed to making it. I gave a lot back, and I over traded, and I misused a lot of the lessons. But when I went back this morning and looked at them, I was able to pinpoint exactly what I was doing wrong. I was able to correct it, and I had a pretty effortless morning this morning because of the review yesterday. And that's all I want you guys doing. If you traded into termination conditions yesterday and it kept taking your money, well then today maybe focus on not doing that. If yesterday one of those 50-50 trades with divergence ate your lunch, well then this morning you should be focusing on taking a better version of the same trade. And this really sets you guys up, and it is going to accelerate the learning, I promise. The second page is when you have your favorite looks, when you show me the trade that you can't live without. This is exactly what I want to do. I want to do this every day. It wins more than it loses. Man, it's like, I don't know, woodland creatures gather around me when I take this trade. This goes into the second tab, your favorite looks. You're building a trading plan that fits your needs. And then finally, we have the client trades, guys. We have you guys being brilliant with the software. You guys embracing advantages, making money, sometimes even losing the perfect trade, but it is the perfect trade. So I put it in here anyway. And the key is that if I see a perfect trade, if I see a trade that fits all of my requirements over and over and over, what it does is this visualization, that was like the worst picture ever. This visualization of what the perfect trade can look like, with absolutely nothing moving, with no stress, no fear of loss, nothing. What it does is it just sets me up to be able to take this when it happens live in the market. I'm like, oh, I know this look. And the market is about to give me that look, and it's time to enter the trade. So go through, if you're brand new, just start clicking on stuff, read the pictures. And if you have a question about it, make sure that you ask. Make sure that you ask. Guys, pictures are the key to getting to where you want to be. Going back and studying those pictures. If you don't, they're useless, right? If you don't learn history, you're doomed to repeat it. We're going to take the first hour and we're going to learn the trigger line of Fibonacci rules for when it's okay to trade. We're going to talk about a high probability trend trade. And it's not even the trade that I want you focused on. It's the advantages that produce the trade. It's the advantages that come together to give you the best of the best. You guys simulate, practice, make mistakes. Annotate charts. Let me see what you're doing. And the idea is every time you post in the room, I'm not going to say, damn it, JW, what did you do with this trade? Why on earth would you do this? I'm going to say, hey, JW, check it out, brother. You've got the best momentum that I think I've ever seen. And you are trading into a termination condition, but with that level of momentum, I see that you took the perfect entry and you were able to get out of trouble. And JW, let's celebrate momentum and let's celebrate direction and let's just high five over the best entry ever. And because you knew that your path wasn't clear, because you knew that it was problematic, I see that you managed out at that trouble rather than hoping that this likely to stop area breaks. JW, beautiful trade. And guys, that's the feedback that you're going to get each and every day. But let me show you the other side of it. If JW shows me this trade with the same momentum and the same direction and into the termination condition, and then he loses, well, then I can say, JW, I want you to notice that even though the look was exactly the same, you do have to adjust your expectations trading into a termination condition. It's going to work for you every now and then, but the reality is when you take away that clear path, it is in fact less likely to work. And I want you to be able to rely on great entries and tight management and out at trouble. And then this one has a couple divergences that also suggest that it's not going to work. But guys, we have this talk every day, and I want you focused on the advantages, reading the advantages, talking about the advantages, because when you know when they're gone, you know that you need to be a little more aggressive. And I don't want you practicing the wrong trades. Not as a new user. JW is a little more experienced. But as a brand new user, I use these blanket terms, and I do all this stuff telling you that terminations are bad and no momentum is bad and the wrong entry is horrible. And it's done not to stifle you, but rather to keep you focused on the advantages while you learn to read your indicators. So focus on taking the correct trades initially. You will learn how to break your rules. And we're going to simplify, guys. We're going to talk about two trades. We're going to talk about the high probability trend trade. We're going to talk about a medium probability trend trade, where most of your indicators line up for the trade. However, a small issue exists. You're going to rely on your ability to read charts to identify the issue. And when you have an issue, you're going to rely on your ability to read charts to manage aggressively, assertively. So we can't put the cart before the horse, guys. We're going to build a foundation with the high probability, and that's going to open doors for the medium probability. And the high probability only has 3 rules. But Mark, there's a million variations. There's a million things that I have to think about. I get that when you guys start reading charts. You really don't. There's momentum that is provided by the first rule. That's your first advantage. There is a clear path. That's provided by the second rule. That's your second advantage. And then there's an entry area, getting in where the market is most likely to continue, produced by your third rule. And a trade is not the desire to win. A trade is not the opinion that the market may go down or up. A trade isn't your need to pay the mortgage. A trade is an accumulation of 3 advantages. We spend an entire hour learning to recognize these advantages. Focus on this first hour, become a chart reader, and life gets easy. We're only going to do it on 2 charts. We're going to let the large chart lead the way. Write that down on a piece of paper in front of you. You're an amazing student, but I want you to remember this. The large chart leads the way. The large chart's a broad stroke of a brush. The large chart is going to tell you what these guys, the large crowd, want to have happen. The large crowd is going to define the direction of the market. All this money pushing the market is going to let you know whether it's going up or down. The large crowd is going to define the momentum in the market, and this is your first advantage, guys. If these guys don't produce the momentum, then you're losing that first advantage. And the large crowd is going to react to the areas that are on your charts, those key Fibonacci areas. And the large crowd is going to let you know when it's okay to look for an entry. The large crowd is going to let you know when it's time. Let me go back to look for that entry. The large crowd's going to say, hey, you know what? The large chart on the most current bar says you can identify the direction, you have established the momentum, you haven't reached an area. This broad stroke, 1 bar, now let's refine it. Let's do an x-ray of that 1 bar. And we're going to look at about 15 to 30 bars on the inside. And we're going to take the first half of that 15 to 30, and it's going to give us a pushback. When everything is strong, we're going to buy Fibonacci support on a smaller, faster chart. This becomes your entry for the high probability trend trade. When everything is strong to the downside, we are going to sell Fibonacci resistance on a smaller, faster chart. And guys, the small chart is nothing more than the small crowd. It's the guys with not enough money to stop these guys, but just enough money to create a little shove back. We love, love, love the small crowd because they push you guys to your perfect entry, to your low risk entry. They push you guys to the point where you can enter the market, reduce your risk, and maximize your profit potential. So it's only 2 charts. And guys, in the spirit of only 2 charts, every time you post in the room, I want to see 2 charts. I want to see your large chart, and I want to see the advantages on it. And I want to see your small chart, and I want to see your entries and your exits. And by going through that, it's going to allow me to give you the absolute best feedback. It's going to give me the most complete picture and you will get the best feedback on your chart reads. So large chart leads the way, guys, and the large chart says rule number one that you must have strong triggers. Strong triggers provide momentum. Momentum breaks areas. Momentum pushes the market in the direction. Momentum will even cover mistakes like trading into a termination condition like JW did. He knew with that momentum, it had a chance to retest. So the only way to have strong triggers, ladies and gentlemen, is to trade with the trend, to go with the direction of the market established by the people with more money than you. So if the background on your large chart is green, it's going up. You should only be looking for rules to be met for high probability trend trades long as a new user. If the background is red, the market is going down. You should only be looking for rules to be met for high probability trend trade short as a new user. I'm going to put that disclaimer in there because, guys, there will be instances where you happily fight that direction, but you've got to be a chart reader to figure it out. So strong triggers means that the small triggers, those solid lines, and the large triggers, those dashed lines, these are moving indicators. That's all they are, moving averages. The small is the faster of the two. The large is the slower of the two. But these guys work together to let you know when the momentum is the absolute best, when it's the absolute strongest. And when your small triggers break above the large triggers, when both triggers are wide and angled in the direction of the trend, green background, the only way to have strong triggers is if the smaller green, the larger green, the background's green, and then there is space between the two. This is strength, guys. This is like scissors opening, ready to cut. This strength lets me know that the odds are favorable for the market to continue up. You can go back on a chart and you can see this look all day long. Large chart, small chart, range chart. Separation between the small and the large means that the market is strong. The momentum is there. In a downtrend, when the background is red, the small triggers have to be red. The large triggers have to be red. They have to be wide and angled in the direction of the trend. Flat triggers do not produce momentum. Flat triggers mean that there is no momentum. We want them opening wide. And then the space between the two, the scissors open, lets me know that the odds are favorable for the market to continue down. So when I have this odds favorable momentum in an uptrend, I'm going to buy Fibonacci support on a smaller, faster chart. Your large chart, that slow moving chart, it looks like it has a tail. You guys are going to pinpoint on the refinement chart exactly where that tail is most likely to continue and ride that wave of momentum to the upside. And when everything is strong down, you're going to pinpoint exactly where the top of that tail is most likely to continue on a smaller, faster chart, and you're going to ride that wave of momentum down. So strong triggers, guys. Strong triggers set the tone for everything. Strong triggers, where's my large chart? Mean that the small are above the large, and there's space between the two, guys. That's it. Most current bar tells me that. Can you give me a Y in the room if you're with me? This is odds favorable momentum, guys. And then look at this. Flat, lifeless, ugly, nothing going on. Guys, there is no momentum here. Notice that it corresponds with key areas. What you're going to find is that when these triggers are flat, your best bet is to do absolutely nothing. But when the triggers are strong, look at that tail. That's where you guys are pinpointing your entry, that highest probability. And it really is that easy. Strong triggers, the market continues up right to a key area. Strong triggers, the market continues up. Strong triggers, the market pushes down. So what you're going to do is scroll back for a little bit, guys. Go look at that momentum. Begin to build trust in the idea that momentum is one of the greatest advantages that you can have. But understand that 90% of your day is spent reading indicators, 10% is having advantages. So odds favorable momentum, that small below the large, those wide triggers lets me know that this is the best time to sell Fibonacci resistance on a smaller, faster chart. This is the new user look, guys. This is the first, the best, the alpha, the one that says everything is wonderful and it's very likely to continue. But when both triggers are down and one of the small triggers gets inside, this is the first sign that momentum is slowing, guys. Rule number one is no longer met. You still have momentum, but it's not the best momentum. You still have a market that's pushing down, but it's not the strongest push down. So you're going to check your other charts. You're going to make sure that they agree. And then you can still take a short trade. Just know that it won't be the highest probability. And then when the smalls work their way inside of the large triggers, you have a weakening or a slowing of the trend. Anything can happen. And this is the term that you're going to hear in the class. Anything can happen up or down. Short trades can still be taken, right? I don't tell you guys when to trade. But if you're taking a short trade with anything can happen triggers, you have to be prepared for anything to happen. They have to be managed assertively and aggressively. And then when those weak triggers hit an area, those key areas, guys, they're more likely to create a bounce. They're more likely to reverse the market because there is no strength anymore. And we've reached a solid line on the large chart, which is my little segue to rule number 2. When I have momentum, when I have strong triggers, when I have the best of the best, and it's time to buy or sell Fibonacci support or resistance, I have to make sure that I haven't reached an area. I have to make sure that I haven't reached what we call a termination condition. And this is going to give me room to my profit targets. And the advantage is called the clear path. The clear path means that there's nothing to create a bounce in that market. So when the large chart defines direction and the large chart defines momentum, we're going to make sure that there's not any areas in the way. We're going to make sure that there's nothing in the way that may create a bounce. And we're going to do a little comparison between the triggers in the area. But these lines on the chart can cause trouble. This is where decisions are made by the people that move the market. This is where buyers buy and sellers sell. And this is where profits are taken and trades are entered. And guys, the reality is you don't want to be in the middle of that decision-making process. Bad things happen. So we're going to use a simple comparison. Let me get over to it. Of the area and the T3 trigger, strength and location. In the areas that we're looking at, I put the visual in the room for you guys. I dropped that picture in there. Red Fibonacci support, blue Fibonacci support. Let me take a deep breath. Red Fibonacci resistance. Yellow 1-to-1 dots. Cyan divergence lows and magenta divergence highs. Any third divergence in the same area. And you're also going to see when that large chart midband can be problematic. That's when those large triggers are a full bar away. So in order to determine, and let me bring this picture back up. I want you guys to see this. We're going to use this comparison and we're going to know if the area is likely to stop the market. We're going to know if the area has the potential to break because of that overwhelming momentum. And you are going to be able to understand when an area is broken and the path is clear once again. So we're going to do this with a comparison. And everything begins with price reaching the area. What does it mean for price to reach the area? When price reaches the area, it means that these dynamic Renko bars hit Fibonacci support, that they smack into Fibonacci resistance. Price reaching the area is the catalyst for the decision-making process. This is where the people in charge say, holy crap, I hit support, I'm supposed to take profits. Or, oh my gosh, I hit support, I'm supposed to enter this market. And what you're going to find is that these areas can stop the market cold. They can reverse the market, or like we saw in crude oil, let me bring that back up, these key areas can create an absolutely ugly fight between the buyers and sellers. And this fight happened to last for nearly 3 hours right at the key area. You'll notice that it sucked all the momentum right out of the market, and it went up, down, up, down, up, down, up, down. Guys, rule number 2 is going to keep you from getting caught in consolidation. Rule number 2 is going to keep you focused on making sure that you've got room to get to where you want to go. And when that momentum is with it, it really helps push it. So let me take this picture, and we're going to go through the 3 options when areas are reached. The first one is that when price reaches the area, check your trigger lines. If they're not below support, don't take any more trend trades into support. You have reached a termination condition. This is an area that may stop the market. This is an area that may create a fight or an untradeable bounce. This is an area that may reverse the market. So that's your very simple recipe initially. Price reaches the area. If the triggers remain above support, below resistance, I want you to just go ahead and be okay. with doing nothing, with sitting on your hands, with making the decision that you don't have to guess because you have a very clear recipe for when an area is broken, when the path is clear. And that is when both the small and the large triggers get beyond the area in question. So when price reached resist or support up here, you guys had to sit tight for a second. 90% of your day is just reading indicators. And you're like, oh man, are they going to react? Are they going to create a bounce? Hell, I don't know. Let's wait for it to break. Small and large get through. The area is now broken. And check this out. There's rule number 1, super strong triggers. There's rule number 2, the previous area broke, and I haven't reached the next one. And guess what, guys? This is rule number 3, where you guys pinpoint exactly where the market is most likely to continue on that smaller, faster chart. So a little bit of patience is going to get you into these best of the best trades rather than hoping or jumping in early or wishing or wanting. So the area is either broken or it's not. That's the new user look. You either have a clear path or you don't. And be okay with that as a brand new user. Be okay with the idea that you don't have to guess, you don't have to hope, you don't have to wish. And then there's one other look where the small triggers go smashing through an area. And I'm going to write odds favorable momentum in between those trigger lines. The small triggers smash through an area with odds favorable momentum, but your large triggers are kind of lagging behind. They're bigger, slower. They're that heavy set child on the track team that doesn't run quite as fast as the gazelles, and it's just they're not there yet. So this is what we call a 50-50 look, guys. This is a look where 50% of your triggers have broken, but 50% have not. This is also a look where odds favorable momentum gives you the potential to break areas. Guys, this is going to be your first medium probability trade. When the smalls break through, but the large do not, the area has the potential to break, but it's not broken. And when the area isn't broken, when it's only the potential that's there, what happens is you have to make decisions, manage aggressively, and change your entry protocol versus what you would for the high probability trend trade. Because when every advantage is present, it's easy. The second you give away one of those advantages, it takes a completely different approach. Andy, you're the lame warthog. 50-50 trade. Divergence. So different look, right? Is everybody cool with the basic recipe? Price reaches. If the triggers don't break, do nothing. If the small and the large get to the other side, do everything if your rules are met. And if they're splitting the area is not broken, not until those large triggers break through. So on my next slide, we're going to begin to exercise our patience bones, guys. Price reaches Fibonacci resistance. When it does, all the triggers are below. And because all the triggers are below, each and every one of you in this room has the ability to say, I choose not to go long into that area of resistance. And if you made that choice, you didn't get stopped out. But off of resistance, it pushes all the way back to support. And when it reaches support, once again, each and every one of you in this room has the capacity to make the choice. I choose not to go short into resistance without any trigger lines through it. I'll wait for the reaction. And sure enough, it keeps you out of a losing short. This is also the gap theory in place, guys. I put a couple pictures about it. If price accelerates away from these large triggers, remember, these are moving averages, and price loves to come back to the averages. If price accelerates away from those large triggers and smacks into a fib, a mid-band, a 1-to-1, it's likely to close the gap. It's likely to snap back up. Those trigger lines behave like a vacuum, and it'll keep you from taking that ill-fated short trade. So I can't go long, and I can't go short, and then price comes up and some magic happens. Look at the trigger lines. Stronger triggers into the area. Look at how weak these are. The small on the wrong side of the large. They're still green, but that is a lot of weakness. And it reaches Fibonacci resistance, and they remain below, and that's a termination. No long trades. And then it reaches this divergence high line. This divergence, guys, when a negative number prints and a line prints off of the top of the pivot, this doesn't happen until about the third bar down. So this is not a termination condition. All divergence means is that there was a loss of momentum, that in this case the sellers stole the momentum from the buyers, and it creates this line that comes across. And that's where the recipe for a termination condition will come into play. When price reaches that line and the triggers remain below, it's a termination condition. When price trades above the divergence line and then back below, it's a pivot stop out. And a pivot stop out says don't take any more long trades. And if Fibonacci resistance is true, Fibonacci resistance is behaving as a termination condition. This adds power to the top. So when I see a pivot stop out at resistance, the market is more likely to reverse, especially with weak triggers. When it does, when my large triggers turn red, my small triggers create space, well, now I have odds favorable momentum coming from what we call a strong top, a termination that reverses the market. I also haven't reached Fibonacci support, which means that my path is clear. And then there's that tail. This is where you guys are going to pinpoint on a smaller, faster chart and be able to capitalize on the termination that created a reversal, on the momentum that was established in the clear path that was present. You will sell Fibonacci resistance on a smaller, faster chart and ride that wave down. And guys, this entry is the highest probability trend trade that we teach. That's the one that typically wins 70 to 80% of the time. That's the trade that creates all sorts of confidence through the memory of success. And there probably was, Paul. So one more slide, guys. Odds favorable momentum smashes support like support didn't even exist. That happens sometimes. And then you can see the scissors closing, and it reaches those yellow 1-to-1s, and when it does, the triggers remain above, and none of you go short because you know better. You say, you know what, I've scrolled back 10 days, and I've watched the market bounce off of these key areas 100 times. I'm not going to trade into it. My money's better than that. And then it gets into the fight. Guys, can everybody see my screen? Or is it just Rob? Okay, so Rob, I'm going to stop streaming real quick and then I'm going to reload it, and hopefully that helps you out. If not, you may need to bump out of the room and then get back in. Did that help, Rob? I just reloaded it. And guys, please, if you ever can't see the screen, if you ever can't hear me, tell me in the room, and you'll see this big flood of Ys. And that means that everyone else can, and it's probably you. So Rob, you're going to want to reboot real quick. Yeah, reboot and come back in. So guys, from this termination condition, price reaches Fibonacci resistance and the trigger lines remain below. There's the second termination condition. From that resistance, it pushes all the way back down to the large triggers, but I don't have momentum. I'm not going short, and I can't go long. And this really keeps going for about 45 minutes. There's about a 45-minute fight. Eventually, it gives me momentum. Eventually, my path is clear. 90% of my day is spent reading indicators. 10% of my day is taking advantage of this long, taking advantage of strong triggers and a clear path, and buying Fibonacci support on a smaller, faster chart. This is the highest probability trend trade that I teach, guys. This is the one that teaches you to recognize advantages. This is the one that teaches you to understand when there is a statistical advantage and it's time for you to pull the trigger. So, is everybody comfortable? Price reaches an area. If the trigger lines don't break, it's okay to do nothing. Like, it's okay. Look at that, resistance. To the mid-band, large triggers don't follow, closes the gap to the mid-band, directly into resistance to the mid-band, pivot stop out, resistance, triggers below. And guys, this is literally 2 hours and 45 minutes. 2 hours and 45 minutes of nothing to do in crude oil. Can you sit still for 2 hours and 45 minutes? Can you do nothing for 2 hours and 45 minutes? Or are you going to give away $1,000 hoping that the market does what you want it to do rather than what your indicators tell you that it's likely to do? And this is what we're just talking about. We're only talking about advantages right now. We're talking about recognition. So lines on the large chart define problems. Sometimes the market turns and there wasn't a line, whether it's a short or a long. This next termination condition is the only termination condition that I respect on a small chart. Remember, the large chart leads the way. The large chart defines direction, it defines areas, it defines momentum. The small chart is an entry chart. The small chart will use lines for entries, continuation points. The large chart tells us when they're problematic. So this is my only small chart termination. This is the only time where rule number 2 will not be met because of what the small chart is telling me, and that's 3 divergences in the same price range. 3 losses of momentum. 3 negative numbers and a cyan line from a low, 3 negative numbers and a magenta line from a high. And just a little FYI, the negative numbers mean absolutely nothing. Please do not try to assign power to them or rank them. It's just a byproduct of Fibonacci or of divergence being true. But when I see 3 at a low or 3 at a high, this may terminate the trend. It may create a shove that takes me beyond my best entry. It may stop the market. It may not. But it takes away the advantage of a clear path. So 3 divergences low or high may terminate the trend. When my triggers are inside of the large, those anything can happen triggers, it makes it even more powerful. And then when the third pivot is higher than the previous, it creates a head and shoulders pattern, or lower than the previous, and that makes it more powerful still. So you're going to see this on a small chart, on a fast chart, when you can't see that change on the slow moving chart. And what it does is it keeps you from that last long. It keeps you from that last short. Or even more so, if you're in the perfect short, it might tell you to get the heck out of it because things are changing and the market may push against you. So guys, termination conditions are the most broken rule for new users. Termination conditions are going to require a little bit of study. Just go back and circle them. Go back and look at them and see how often the market bounces off of these key areas. And I want you to see it. There's a bounce, there's a bounce, there's a bounce. It breaks, pulls back and bounces. There's a bounce to the downside. It never broke. Large triggers didn't break. There's your retracement. There's to the tick. It's a bounce, it's a bounce, it's a bounce. It's a bounce. Guys, I'm telling you, eventually you're going to start to trust that when price reaches an area and the triggers don't break, that you're better off doing nothing, that you're better off sitting on your hands and waiting to see what the market does rather than hoping that the market bends to your will. So scroll back. You've got 10 days worth of data. You've got 10 days worth of developing trust that termination conditions spoil the party. All right, let's get to the good stuff. Rule number 3 says that we're going to use a limit order to buy or sell a pullback, that little push that the small crowd creates, and we're going to do it in an area. Fibs, midbands, yellow 1-to-1s. But here's the key, guys, and I want you to really embrace the language for rule number 3. You are going to use a limit order to buy or sell a pullback at an area that is inside of triggers. And there are 2 types of triggers that you're going to see for entries. And I'm going to show you a picture of both of them because I want you to focus on the best. You're going to see what we call favorable large triggers. And favorable large triggers mean that your large and synthetic are one on top of the other. They are literally 2 snakes riding piggyback. And synthetic only means these stepped triggers. These are the large triggers from the large chart. But when they are one on top of the other, wide and angled in the direction of the trend, you have the absolute smallest area where the market is most likely to continue. You will have the absolute least amount of risk going into this trade. And by waiting for the pullback to the areas, you'll have the highest profit potential. So what happens is the triggers, that moving average, are where I expect this price to come to. But I don't expect trigger lines to stop the market. I give it something solid to bounce off of. It's like throwing a ball up against a wall. The ball hits the triggers and the triggers don't do anything. That's just numbers. That's a regression to the mean average, I think is what somebody smarter than me called it. But when you give it a fib, a mid-band, a yellow 1-to-1 inside of them, now we have a place for that market to ricochet. So when they're one on top of the other, guys, your advantage is huge. When those correction points are splayed one away from the other, when those triggers aren't one on top of the other, well, you really don't know which one it's going to go to. You don't know if it's going to go to the synthetic. You don't know if it's going to go to the large. And the only way to properly manage this trade is to get your stop below that correction point. And guys, that's a lot of risk. So for the brand new user, let's focus on the best of the best. For the brand new user, let's make sure that you guys are using areas inside of triggers. And the large chart has already defined the direction. Everything is up. The large chart has defined the momentum. The scissors are open. And the large chart has defined the areas. This resistance is off in the distance. Price has not reached it. It's just a target if I get a long trade. And everything has cleared. Both trigger lines have cleared the previous resistance, which means it's down here pretending it's support. The large chart says look for an entry. I have the advantage of momentum and a clear path. So when the large chart says up and the rules are met, we're going to buy low at Fibonacci support on a smaller, faster chart. Or if the large chart says down with odds favorable, momentum, and a clear path, we're going to sell high at Fibonacci resistance on that smaller, faster chart. It's the refinement process that the small chart provides that allows us to do that. On one bar on the large chart, you're going to see momentum, you're going to see direction, you're going to see a clear path. The bottom of the most current bar should be the beginning of the pullback on the small chart. The top, that tail or wick, should be resistance inside of favorable large triggers. So all 10 bars up and all 10 bars back down are all represented inside of this one bar. The large chart doesn't blink or fluctuate. The small chart is going to show you the fluctuations within the large bar. We're going to use that to capitalize on our entries. So let's go through a short entry together. What do you say? Large chart says down. Large chart says momentum. Large chart says clear path. Can you please give me a Y in the room, brand new users? If you can see how on the large chart, the most current bar, my rules are met. And this is what it's going to look like. Notice that there's no tails. Notice that there is no pullback on the large chart. It's just a steam train cranking down. So I wait for the reversal bar on the small chart. I wait for my small crowd to begin the fight. When they do, I have to get to work. The first thing I do is I look for my trigger lines because I know that's where price is likely to correct. I look for the large and the synthetic. And this isn't where the market is likely to continue, guys. This is where I'm looking for areas. From the top of the triggers to the bottom of the triggers, I mean, look, it already hit the bottom of the triggers, right? I'm not getting in there. What I'm looking for are areas, fibs, mid-bands, yellow 1-to-1s. And I'm going to create what we call a window of opportunity. I'm going to create the point where the market is most likely to continue. For a short trade, it is most likely to continue from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. For a long trade, it's most likely to continue from the highest point of support to the lowest point of support. So I have to define where the market is most likely to continue, and I do that using the areas. Whoop, get back up there. So once I find my areas, the only thing left for me to do is to activate a limit order just below the lowest point, just below that window of opportunity. And I'm at the lowest point because the large chart has momentum, the large chart has nothing to bounce off of, and I'm not going to trip over a couple pennies trying to save a few dollars, guys. So my limit order is activated. And if the market comes back up there, I'm in a short trade with every advantage I could ever hope for. And guys, this is the best of the best. This is your entry for the highest probability trend trade. This is what I want you focused on for the first 20 days. Once you can identify where the market is most likely to continue for a long trade, once you understand where that bounce is most likely to happen for a short trade, you can kind of piece it together. The large chart leads the way. The large chart says up. The large chart has momentum. Price didn't reach that divergence high. Even though it's a couple ticks in the distance, it didn't reach the divergence high. And you're thinking, man, there's not enough room to get paid. But because we wait for the reversal bar, because we find the triggers in the areas within, that $50 potential turns into $250 potential because we're buying low at Fibonacci support. If you scroll back on your large chart and you circle these tails, go to your small chart, see if they line up with support inside of favorable large triggers. Go to your small chart and see if your rules were met for an entry. And if they are, guys, this is your best of the best. This is the trade that creates confidence through the memory of success. This is the trade that teaches you to understand momentum and termination conditions and entry areas. And this is how you become a chart reader. Let's go see if your crude oil at that particular circle gave us an entry. Let me find my small chart. There it is. And guys, this was a while ago, but I want you to see it. Does everybody see strong triggers? Does everybody see a clear path? And I circled a tail, guys. This is how you're going to study. This is how you're going to prove me wrong. You're going to say that Novak is full of beans and there's no way this actually happens. That jerk face, hand-picked, pullbacks to support inside of favorable large triggers. To the freaking tick, ladies and gentlemen. This is how you study. So when you take a picture, I want you to get the large chart from the top left corner to the small chart to the bottom left corner. I want you to show me your timestamps. I want you to show me your prices because we're going to line the two up. And then I want you to do this. I want you to go to rule number 1 and I want you to say strong triggers. But don't just say strong triggers. I want you to point to those strong triggers. I want you to identify that it's the absolute best of the best. And I want you to put no terminations. And if you really want to get good at this, put price didn't reach an area. And here's what you need to do. You have to put an arrow to the top of the bar with the tail on it. And then the most important annotation, guys, the most important annotation is bought a mid-band and then go all caps inside of favorable large triggers. I've identified rule number 1. I've identified rule number 2. I have identified rule number 3. And guys, if I was in at 21, I was out at 52, and that is $310 worth of profit to get to the key area with all that momentum. Your job is to share that link, get it to screencast or copy it. And then once you get it, paste it in the room. And say, hey, Mark, did I read it right? Hey, Mark, did I take the correct trade? And if you did, and if the feedback is absolutely that is the correct trade, I want you to go to your favorite looks and I want you to right-click and paste that link in there. Guys, if all you have are these screencast links in there, you're fine. When I started with the software, I had 300 screencast links because I didn't know this trick. I'm going to show you the trick, though. If you go to your Insert tab, and click on the link button, it's going to let you turn all of that stuff, paste it into the address bar. It's going to let you turn it into something that says perfect long. This is called inserting a hyperlink. Once you click OK, whoops, I didn't do it in the right spot. Once you click OK on that perfect long, I put it in the wrong spot. It turns that screencast address into the perfect long. So now you come back tomorrow and you click on that link and you say, egads and little fishes, it just doesn't get any better than this. I need to learn this look. I need to study this look. I need to recognize this look so that I can repeat this look every day. And guys, that's your high probability trend trade. And the best thing about this trade is once you understand where the market is most likely to continue, once you're able to pinpoint that window of opportunity, well, then you understand where the market shouldn't go. And that's the first step in management. Actually, that's not. Managing your risk begins with having odds favorable momentum. Managing your risk begins with not trading in determination conditions. Managing your risk happens when you sell a pullback to resistance inside of favorable large triggers, or you buy a pullback to support inside of favorable large triggers, because you know exactly where the market should continue. You know exactly where that bounce should happen, which means you know exactly where the market should not go. 4 or 5 ticks above that window of opportunity, guys, you have a stop waiting. And if the market goes up beyond it, you just lost. And losers are a normal part of a positive equity curve. I will never sit here and tell you that you won't take a loser. In fact, I'm going to tell you the exact opposite. Go ahead, tape up, play hurt, and get used to losing. But the key is that you take losers with every advantage. Those are acceptable losses. Same thing with the longs. And then once they begin to go in the direction of your trade, you can reduce a couple ticks above that reversal bar, a couple ticks below that reversal bar. And what that very strict adherence to understanding where stops go and how to move them appropriately, you can turn trades that don't work out into 2 to 3 tick losers. You can turn these trades into small losses instead of having to take big 300-point losses. And look at this. If you got into the market, we'll just stick with this example. The market shouldn't have gone down here, which meant you had about 6 or 7 ticks initially. Once you got the reversal bar, you were literally risking $30 on this trade. When they are together, Rob, the tighter they are, the smaller the window of opportunity. The tighter those triggers are, the less, where's it at? Bum, bum, bum. The smaller the correction point. So let them be tight, guys. Give yourself that advantage. And that's all the first hour is. The first hour is defining your entry, getting into the market where the market is most likely to continue, understanding how you can go study it. So, Jen, I want you to go back and circle tails. Who else is in here? David H., go back and circle tails. Grant, go back and circle tails. Andy, go circle tails. Zorro, go circle tails. Because what you're going to find is that when the large chart says you're strong, when the large chart says everything is up, circle the tail. And let's see what it looked like. And it looked exactly like a pullback to Fibonacci support inside of favorable large triggers. So we're committing this look to memory, guys. We're committing this look to memory. Look at this. We had momentum, but not a clear path. Can you give me a Y if you see this? The large triggers never got above the fibs. I had momentum, but the large triggers never got above the fibs. One divergence, well, let's do it this way. No divergence says give it a shot. Look at the entry. And guys, if you were in at 56, it went all the way to 75, over $200 worth of profit. One divergence says, dude, it may not break. Two divergences says, seriously, it's getting problematic. Three divergences says, guess what? We're going to stop your butt out, and then maybe we'll go. So you guys have rules in place to know exactly what you're getting into, to be able to recognize these patterns, to not rely on your desire to win, but rather your ability to read indicators. So once you get good at this, guys, you've got to have a plan. You've got to know what you're looking for each and every day. You got to understand how to get into the market. Because once you understand how to get into the market, life falls into place, guys. Everything gets easy. So this is a stepping stone in your learning journey. This is the beginning of the road for new users. And guys, this is a pleasant memory, go back nostalgia for you guys that are struggling, that have been going for a while, but you're not finding the success that you really wanted to find yet. Maybe you're chasing too many trades. Maybe you are trying to figure things out. You want to take all the trades. You see these guys in the other room taking these trades that don't make sense, and you want to do what they do. If you're not a chart reader yet, the likelihood of you catching this stuff is pretty slim. So This KISS plan is a great way for you to refocus or for you to create an initial focus. And it's designed to optimize your chances of success with the high probability trend trade or the 50-50 trade, that one area not broken trade. But through simulation, study, class feedback, continuous practice, guys, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's my brother playing with AI to tell you that once you're a chart reader, doors open. Once you can look at your chart and discern whether or not there is momentum, a clear path, it really makes life easy. And your simple plan for consistency is don't fight the large chart. Let the large chart lead the way. Don't fight momentum on the large chart. Don't trade into areas on the large chart. And then we just spent an hour defining your entry. Guys, this is your KISS plan. This is your roadmap. This is not my trading plan. My trading plan is based on 3.5 years of reading indicators. Your trading plan is based on being brand new. Let it be simple. Let it be easy. Let it be focused. And I've never had anybody take just high probability trend trades, be able to mark yes to each and every one of these, and do worse than 70%. So if you're truthful with yourself, the whole idea of trading is winning. The whole idea of trading is making money. And money comes from a statistical advantage. It has nothing to do with your desires or your wishes or your wants or your hopes. My father-in-law used to say, poop in one hand and wish in the other. Tell me which one fills up first, right? It's a little crass, but it's a pretty good analogy. You just end up with a handful of poop. So define your entry, guys. There's pictures about strong tops and bottoms, strong triggers, terms at lows, terms at highs, entries longs, entries shorts. I've put them on the plan for you. I'm also giving you a checklist that says, hey, police yourself. Every time you take a trade, this should be going on. You should be able to mark yes. And for you visual learners, I'm going to give you the same checklist with pictures. Here's your strong top or bottom, right? Here's your termination that reverses the market. There's your strong triggers, and there's that wonderful language that says, hey, anything can happen up or down, your advantage is gone. He used very different words, Rob. This is a picture of a termination. This is a picture of a clear path. This is a picture telling you that the path isn't clear, that rule number 2 isn't met. I like it, Ron. There's your window, what you wait for, where your order goes, beyond the window, both directions. So guys, all of this is just a gift for you to keep you focused. And I don't tell you when to trade. I don't tell you how to trade. I don't tell you what trades to take, what trades not to take. I don't tell you to enter the market or to exit the market. My job is to teach you to read indicators. The easiest way to learn to read indicators is through the high probability trend trade. So if you focus on that a little bit, life gets pretty good. And then once you can take the entries, once you understand where the market is most likely to continue, then management starts, guys. Your management will be dependent on the trades you take. Your management for a momentum style trade will be different than your management for a high probability trend trade. Your management for a 50-50 trade will be different than your management for a high probability trend trade. So it makes sense as you learn management to focus on taking the best trade, to get into the market where it's most likely to continue. Because when you know that, you know where the market shouldn't go. And once you're in that trade, it's important that you just let it play out, especially on simulator. If you're terrified to lose money on simulator, guys, it's going to be just heartburn and hair loss when you go live. So get comfortable with the idea that you're focused on the process and not the result. And once you're in this trade, you're either going to get stopped out or all that momentum in the clear path. Small chart's going to give you a reversal bar. And if it does, you're going to reduce your risk 2 ticks above it. Or if it's a long trade, 2 ticks below it. And then there's nothing for you to do. Once again, you're either going to take a smaller loss, which is okay, it happens, or it's going to go to your first target. And this is the frustrating part for you guys, is that first target's only $100 in the distance. With all that momentum and a clear path, I'm not going to lie, this first target's pretty easy to hit. And when you hit it, you're going to go break even. You're going to take all the risk off the trade. $100 doesn't seem like a lot of money. If that's the best you get per contract, 2 contracts, you're adding nearly $50,000 to your bank account every year. Um, if you do this twice, if you get that first target twice, two contracts, and it's a $400 a day, that's the best you can pull off, guys. That's a $96,000 year. I don't know if you realize that, but $96,000 is well above the median income for the United States family. And that's from about 3 minutes worth of work a day. So when you get to 100 and you go to break even, all you're doing is you're telling yourself that I'm in this trade because of the large chart, because everything's set down and nothing has changed and life is good. And if it hits your second target, you're going to exit. You're going to get out. No matter what your indicators are telling you as a brand new user, you're going to exit that trade. And you're going to be up $300. And $300 a day, if that's the best you can manage, is a $72,000 year. But the idea isn't that you're winning money in the beginning. The idea is that you're identifying your entries. You're recognizing the advantages. You're speaking to yourself every time you look at a chart, not about hoping to win or lose, but whether or not you have momentum, a clear path, and an entry area. You're resigning yourself to the fact that you're not in charge, that you're only trading patterns that they create and capitalizing because the patterns repeat themselves every day. The large crowd is a shark and you are a remora. And you don't need home runs to be successful. So I think I dropped the KISS plan in there. And I dropped both checklists in there. And we've talked about entries and we've talked about advantages. And we've looked at odds favorable momentum. And we can see that there's a clear path. And if I get a reversal bar, these one-to-ones are kind of the only spot right at the base of those triggers where the market is most likely to continue. And if it moves beyond there, I have to rethink things. And when I have weak triggers and no areas inside, look how difficult it is to gauge. That is the Russell. But the flip side is when I have everything up in a clear path, it becomes a little easier. Do we have any? When I have strong triggers and a clear path, if I circle the tail, guys, I can't make this up. Give me a Y in the room if you see this. And guys, this is important to me. Chris and Jamie, it may be kind of hard on the first day, but if you go back and study these patterns, it gets easier. David H., the same. Zorro. On day one, you're like, holy crap. Week one, you're like, holy crap. But I keep seeing people making money with this look. Look at the pivot stop out, guys. 2 ticks below that divergence low, and that's what set the market in motion to the upside. That is the termination that created the reversal, that gave you odds favorable, where you had a clear path and the perfect entry. And guys, this market never even blinked until it got to Fibonacci resistance. So from 61 to 67, that is 6 times 10, 600 ticks. It's a $300 move. Wouldn't it be great to just capture a couple of those a day? And what do you guys think here? Price reached Fibonacci support. The large triggers were a full bar away. Nobody goes short here. There's your gap theory, ladies and gentlemen. We talked about that earlier. There it is, live. And then Ron, you said you had the same thing on the ES. I don't have the ES open. I can, though. It was moving pretty slow, so I didn't go for it for a while. The RTY was moving a little better. But guys, here's the deal, is these patterns happen on every chart. These patterns happen all the time, every day. You just have to learn the patterns and get good at them. Whoops, and I'm just going to make it so you can't see anything at all. You're not in charge. So I'm going to take 5 minutes, guys. I'm going to go stretch my legs real quick. One of the things that I encourage people to do, and you certainly don't have to, is stand up from your computer every now and then. Get away from your computer, roll your chair back, whatever you need to do. But don't stare at it forever, especially if your rules aren't met, because what happens is you start putting yourself in a position where boredom starts to fabricate trades. Boredom starts to put you in a position where you're like, well, I really want it to go up, but my rules aren't met, but I haven't done anything in a while, so let me go ahead and take a long trade. Or I don't really have the best momentum, but let me go ahead and take the trade anyway, because momentum really isn't that important when I'm bored. And what you'll find is that if you take those breaks every now and then, it makes life a little easier. I'm opening up the S&P right now. So there is my small chart on the S&P. Let me get rid of that horrible looking cursor. There we go. And then here is my large chart on the S&P. Oh, it's coming up. We're still calculating. It takes a second. I haven't opened up the new contract yet. So it won't let me move the large chart over yet. I really don't even want the S&P up, but here it comes. And there it goes. So what's the read on the S&P right now, guys? Strong triggers up. The path is clear. Whoop, we're weakening our triggers. We're at the tail end of momentum. The scissors are closing. But we do have a clear path. If we take an entry at 52.19, it's a medium probability trade because we're forfeiting the advantage of momentum. So guys, watch it play out. See what happens. I'll be back in 5 minutes. When I come back, we're going to start clicking on every chart. We're going to start answering questions. We're going to start doing chart reads together. I'll see you guys in 5 minutes. All right, guys, let's get back to it. Wow. Support with all the triggers above. It did give a bounce. It may not keep going because we don't have the momentum to support it, but there was definitely a reaction. I'm going to do something first. I just want you guys to see this. I love talking about the potential that's there. Oh, did that not get it? Let me snap a picture. This is my brother and I talk all morning. We trade pictures all morning. You can see how many pictures there are at the bottom, and it just scrolls forever. My brother teaches over in the pro trading room, and he talks about what he sees every day, and he talks about the advantages, and he talks about a couple different trades, and he literally trades live over there. This is his day. He's using a replicator that takes the trades from one account and mirrors them on other accounts. And right now he's up $45,000. Not a bad day. He's definitely a chart reader, but I just wanted to share that. Guys, the potential's there. Second lower divergence says stop trying. But you've got to be a chart reader first, guys. The results don't come because you want them to come. The results come from the work that you put in, the simulation, the study, the class feedback, all those different things that make stuff work. So I'm going to scroll up to the very top of the day, and we're going to start going through it. We're going to start clicking on charts. A lot of you guys posted yesterday at the end of the classroom. I'm going to go ahead and I'm going to cover those because I don't want you guys missing out. So this is actually from noon yesterday, and Steve says, and I love this, Steve says, when all of my charts are down, I'm just going to go down and make money. And he absolutely kills it. Nice one, Steve. I really like that trade. And then here's our lesson for today, guys, and this is a big one. And Gino, I want you guys to see this. And this goes back to the lessons that we had today, just talking about termination conditions. And I want you to see exactly how this works, and I want you to read the annotations. And guys, this is so normal for everybody, and I'm so grateful that you're willing to put stuff like this in the room. So it starts with confused as to why this didn't go. So let's talk about it. And Gino, I hope you're with me here. Odds favorable momentum. I'm going to use the shape. Odds favorable momentum. What do you think, guys? I agree 100%. That is odds favorable momentum, without question. And then the next one says clear path. And Gino, we've identified your pattern. And guys, this is one of the things that I do, is I'm literally going to be able to identify what you guys see and why you see it. And I actually made a picture of it. So we're going to go back to the lesson on a clear path. A path is clear. A path is only clear when both the small and the large break through the area. So it's important that you understand that while the red Fibonacci was starting to break, it still hadn't. These yellow 1-to-1s are also not broken. Can you guys give me a Y in the room if you see it? So this is not a clear path. This is one of those 50-50s, guys. This is one of those, it has the potential to break because that momentum is freaking amazing. But it's not a clear path. It has the potential to break, but it's not broken. And what you're going to find, guys, is that when you have a 50-50, especially when it's coming from a termination where the triggers didn't stop below the area but rather above, this 50-50 is less likely to work. This 50-50 is even less likely to work with divergence. And this 50-50 on the NASDAQ is even less likely to work when your small triggers are coming up strong against you, because what happens is these small triggers begin to act as support. And guys, that's a NASDAQ thing. I try to talk about it every day in here. But when those small triggers are against you strong on the NASDAQ, look how they behave to support 1, 2 times coming into the area. So, Gino, the momentum was overwhelming. But if you had taken into consideration that it was a 50-50, not a clear path, it would have changed your approach on the entry because it wasn't from a good top and it had divergence. And then the next part of that is if you're going to try to trade the NASDAQ, guys, if you are hell-bent on trading the NASDAQ, these small triggers absolutely destroy you when they're up strong. Because on the NASDAQ, let me show you in the live market real quick. Whoops. In the NASDAQ, your large chart is a 34.5. Your small chart is a 13.2, which means that your small chart on the NASDAQ, Gino, is your large chart on any other market. And are you going short against these strong triggers? And everybody that trades the NASDAQ, ask yourself this question. If it were crude oil, if it were the Russell, am I going to go long against this look? Am I going to fight these small triggers to take a trade, especially when they are outside in that momentum phase? Hell no, you're not. So guys, NASDAQ takes a different level of respect. NASDAQ, you have to respect the idea that these are like large chart small triggers, and if you fight them, it's detrimental. So there's a great lesson there. There's a great couple lessons there. I don't have a clear path. My small triggers are strong against me. It's just no long yet for my NASDAQ traders. So, Gino, I think that you are one step, you are a stone's throw away from eliminating 90% of your problems. And it's with the identification of whether or not it's a clear path or whether or not it is one of those 50-50s. And I think that the annotation is key, guys. You've got to go through and you've got to say to yourself, this is my strength, this is my path, this is what I'm seeing. Chris and Jamie, you're posting. Everything is strong. And you're saying, wow, look at how strong it is. And that is a momentum style trade right there that creates a pretty easy win. Good to see you posting in here. And then, Gino, we're going to go to the other side of the coin on your chart read. And you felt that this was intuitive. The 13.2, yeah. Big deal. So, Gino, let me blow up your tiny little chart here. And can we go through the whole idea of, we had a great lesson on momentum phase yesterday. Do you remember that one, Gino? When the bars are to the left of the small triggers down, you're in the momentum phase. When the bars are to the right of the triggers up, you're in a momentum phase. And I'm going to read what you wrote first, and then we're just going to celebrate, dude. We're going to, poppers and noisemakers. Did not of both triggers and charts going on the big chart. That's a weird sentence. Had momentum on the small and mid-band from a weak top and a reversal for nothing. Small trigs on the large were going red, jumped in, went short, managed for a gain. Not sure what I did, but it felt intuitive, which I know is wrong. I feel like the conventional rules are hard to deploy on the NASDAQ. Gino, you don't have any idea how amazing that sort of annotation is. So let's break it down into a chart read. And for my chart readers, I want you guys to follow along. So Gino, pivot stop out at resistance. That is a killer termination condition. Wouldn't you agree? Pivot stop out at Fibonacci resistance. Man. Your large triggers are a slow moving indicator. Your small triggers are a fast moving indicator. So Gino, what you had here, I'm gonna type it out because I think this is a trade that you're gonna end up loving. I really do. I think this is a trade that you're going to love. So from a termination, no triggers through it, you have momentum phase on the small triggers, strong down. Does that make sense on the chart read, everybody? From a termination condition, your small triggers, your faster momentum indicator is screaming, and you're in the momentum phase, which means that the bars are to the left. It hasn't slowed down at all. So Gino, here's the second part of it. On your smaller, faster chart, you're in the momentum phase. And that little snap up, snap down, you go short on the momentum phase, matching the momentum phase, and you get paid doing it. So Gino, your large chart had a clear path, right? There was nothing between that termination and the next termination. Would you agree? Does everybody see that? What Gino did is he found a way to capitalize on the first move off of a top or a bottom. Small triggers roll, momentum phase is established, match it on the small chart, and get the hell out when you get to trouble. It's a momentum style trade. But Gino, your small chart said, look at me go. And look at how when you get to the other side of the bar, that's where the bounce happened. So it felt intuitive, right? And you're not sure what you did. So let me give you my annotation. And I want you to go back and I want you to look for this trade. I want you to go back and say, man, from a great no triggers through termination with those strong triggers down, can I find an opportunity to take advantage of that first move, knowing that the midband is my first target? Gino, I love this trade, and it just validates that you are a really good chart reader, that you do understand what you're looking at. You just have to adhere to some simple rules to keep you focused on the best of the best rather than every move that you hope goes. So nicely done, man. And then Joel with a little chart reading. Let me drop this back down. Sorry. Weak bottom. Strong triggers. There's a tail. 50-50. Not the best. Divergence. Midband may hold. You don't see that divergence till way up here. But this is kind of that first opportunity, right? There's that momentum. Get to the other side of it. Opportunity. Nice reading, Joel. And then Cav, termination, momentum. You didn't catch this one. This is the one that we circled in the chart, or in the room. That was the easy one, right? And guys, I want you to see how cool this is. Cav gets 3 divergences, right? And he says, I'm not going long, not going to do it. All this indecision. But his large chart always says up, and his small triggers always say up. And Cav's just saying to himself, I know it's going up, but I'm not going to fight this nonsense. And then once everything rolls and he has that momentum phase, Cav says, let me make it easy right up to the next one. Cav, beautiful. Does the momentum phase help a little bit? Did that lesson give you a little more confidence going into this one, I hope? I love it. Great trade, Cav. And guys, if you have a question about anybody's charts, all you have to do is raise your hand. I am so happy to answer anything and everything that I can. And Cav does a good job. Market coming from a good bottom. Triggers wide. But I really want you guys to be able to repeat what you're doing. So if you're not annotating your charts, a lot of the times you're kind of hoping for stuff to work. All right, Grant. And we answered this one. Those are the reversal bar markers. Those are the ones that tell you where this bar becomes a reversal bar and where this bar becomes a reversal bar. And then we use the reversal bar marker to identify the gap theory. When price is a full bar away and things are below that reversal bar marker, it's likely to close the gap. I took a picture of it live. I believe this was the NASDAQ, where it pulls right back, full bar. It just says no more longs. Great lesson there. Nope. Just got there, Dwight. All right, Dwight. Momentum is good, right? Path is clear. And you say it's a momentum trade. And guys, again, this is annotation. So Dwight, with your small triggers against you, is this really a momentum trade? Just one bar, just one Renko bar, Rob, that's it. Okay, so there's our first challenge. Is if you think that it's a momentum trade, but there isn't momentum, there's something wrong, right? Something is a little off. So understanding what kind of trades you're taking has a lot to do with your entries. Your entry for this trade, Cav, was the pullback to resistance inside of favorable large triggers. This is just a trend trade. That's all it is. Does that make sense? Oh, I'm sorry. I said Cav. I meant Dwight. It's just a trend trade. Odds favorable, clear path, pullback. And then second higher divergence says that you're going to have to manage this trade. And then, Dwight, here's that lesson that we just talked about. Look at your small triggers at the time of your entry. They are right up your butt. So you're fighting that immediate momentum. Even if you would have waited for a close on the other side, you would have had a fighting chance. Does that make sense? So that was your entry. That was your reason not to take another trade without a signal. And then ultimately it does go up, and I think that was coming up on news or getting close to news. But it can't be a momentum trade if there isn't momentum, and I think that's really what I want to get on that. And you guys have to know what you're looking for, right? You have to know what kind of trade you're looking for. If you were really going to take a momentum trade, Dwight, it starts over here in the momentum phase. Over here. That's a momentum trade. That's your loss of momentum to exit it, and then momentum trades turn into trend trades. And if you're going to trade the NASDAQ, you have to be hyper aware of the 5-1s but it's not 5-1s. Oh shit, you are trading a 5-1. Ooh, pardon my French. Dwight, dude, you're trading a 5-1 on the NASDAQ. You have a pissed off mongoose that's been smoking meth for 8 days in a shoebox, and you're trying to predict its moves. There's a huge reason that the NASDAQ is 34.5 and 13.2. Maybe you're an adrenaline junkie. Go swim with sharks. Yeah, but it happens too fast to read it. That's the problem. Is it happens too fast to read it for 99% of the world. And I would say that you may be a part of that percentage because you think you're taking momentum trades that are really against the momentum. So the correct workspace would probably pay dividends for you. It would slow it down and make it more manageable. Because you're a great chart reader, but shoot, even I'm pretty good at chart reading. I wouldn't even dream of trading a 5-1 on the NASDAQ. All right, Haji. Beautiful. Odds favorable, 50-50, no divergence, perfect entry, quick profits because it's medium probability. And when that 1-to-1 doesn't break, you're like, hell no, I'm getting paid. Your stop was not too close. Your stop was perfect. There's just no reason to risk it. Haji, that is a beautiful 50-50. 100% rules-based, straight off the KISS plan. 34.5 and 13.2, Dwight, absolutely. And if you go to the resources page, the easiest way to do it is just download the indicators. And it'll put all the new workspaces. You'll have all the most current templates. And then you can just open up John Novak's ones that he made for you, and it'll make life a little easier. And then Cav, momentum to the downside. You're in the momentum phase. Into the large synthetic triggers. Man, Cav, you know I got to call BS on this one, right? Took the pullback into the synthetic triggers. No, you jumped in the momentum phase. That's it. You jumped in. You didn't enter here. Yes, you did take the pullback. No worries. That's okay. So you had, but momentum phase, right? Momentum phase. This is okay. Screaming, right? And it comes back, and then Cav, I know that you know that that's a potential entry, which is why you held this one, right? Still in the momentum phase. You get paid, you get paid. I love everything about the trade. But I just want you guys to know that I notice. If you type on your chart, if you annotate that you took the pullback, but you just jumped in, it's okay. I'm never mad at you, right? And I think that your momentum, 69.50, so you are in down here, not up here. Still a great look. Everything said it was going to those one-to-ones. You even made it even better, not trading into it, trading from beyond it. And just, I love it. Beautiful work. This is the continuation of this trend trade in the momentum phase of the indicators. It's an awesome trade, Cav. I just want you guys to know that everything we're doing is talking about chart reads. Everything that we're doing is talking about being able to annotate so you can go back and repeat. So it's important when you annotate that you annotate truthfully, without a doubt. And then I'm just going to show, this is today's momentum phase lesson. Momentum phase for the win. 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 Fought the momentum phase, had to go twice. Momentum phase for the win. And then I put this one in there, 50-50 multiple divergences. Why on earth would you do that? But guys, this was my morning. And this was the first picture that I took. Momentum phase for the win. Coming off of termination conditions. Guys, I had an outstanding morning. And one of the things that I want you guys to notice is that I took 4 trades this morning. I took 4 winning trades and 1 losing trade. And I'm up right at $800 on the day on a 2-lot. I'm not holding for home runs. I'm not looking for the biggest and the baddest moves. I'm not trying to make $1,000 a pop. I'm making sure that if there's trouble, I get paid. That if there's trouble, I get paid. I don't hold on. I'm on the other side of the momentum phase, so I take an exit. If there's trouble, I get paid. If I get to the other side of the momentum phase, I take an exit. If I get to the other side of the momentum phase, I take an exit. Guys, I'm not hitting home runs. What I'm doing is I'm cranking out base hits with every advantage that I can come up with. And I'm letting that add to what I do. I'm letting those small wins turn into a pretty nice P&L. So I wanted to share that. I don't share my trades every day, but we've been talking about momentum phase, guys, and that's 5 examples of the momentum phase for the win. You know what? It's nice to have you here, Michelle. It's just everything that John teaches. So this was a termination. It was a 50-50 that didn't work. When everything rolled, I took a shot up. This was a termination that held. When everything rolled, I took a shot down. This was a termination that held. When I got above everything, I took the momentum long. This was just an HVA breakout trade. This was a white bar trade using a range chart. So it's nothing new. I'm not trading anything different. I'm just waiting for it to be right. That's all it is. When I trade the NASDAQ, guys, this is my setup. And I don't mind sharing it. When I trade the NASDAQ, my large chart still leads the way. I recognize the termination condition. That's where everything started. My termination condition was verified on a smaller, faster chart, divergence directly from a fib. I also had a divergence here, or I had a termination on a range chart. And then I use this 21 range. And guys, momentum phase, pull back to the small, lines right up with what's called an HVA breakout trade. I've been doing this a while, and what it did is it allowed me to capitalize. Small triggers roll, give me the momentum phase. It allowed me to capitalize on this termination condition. That's all it is. Everything else stemmed from this termination condition. Does that help, Michelle? It's everything that John teaches. And then Paul, are you in here? Paul, do you notice that the 8-3 triggers, I'm on the correct side of them? Those fast triggers? There's your market flow lesson, Paul. I'm on the correct side of those triggers. It's huge. If I try to go on the wrong side of them, I get my ass kicked. If I try to go from the momentum phase, I get my ass kicked. If I fight momentum here, I get my ass kicked. But if I'm patient and I wait and I let it do what it's going to do, well, then it allows me to get paid. And I'm not going to lie, I sure do like getting paid, guys. It's fun for me. And it's nice to have you here, Michelle. All right. Is this Andy? Andy, are you with me? Or are you at the dentist? Let me see where we're at. Okay. Cool. So, the recipe for a good bottom, Andy, is a termination that creates a full reversal. Did we ever get the full reversal off of this bottom? This becomes important in the chart read. A good bottom requires these large triggers to go from red to green. Does that make sense, everybody? In order to have a strong bottom or top, the only way that I can have a strong bottom or a top is if I have a no triggers through termination. Whoops. Price reaches the area, the triggers remain below, the large triggers roll. Price reaches the area, the triggers remain above, the large triggers roll. Price reaches the area, the triggers remain below, the large triggers roll. So what you have here, Andy, is this awesome example. No, and that's going to be the next lesson that we talk about, is everybody in the beginning learns in half-truths. Everybody in the beginning takes what they believe to be true and trades it. And I had a gentleman that got upset with me because I kept telling him that he didn't have a clear path, and he kept insisting to me that he did. And I'm like, I'm telling you right now, there's only one way to determine a clear path, and the small and the large have to break through. That's the only way. There's only one way to define a good bottom as a brand new user, and it requires this rolling of the triggers. But what happens is we begin to speak to ourselves in half-truths. And I know, because, guys, I do it too. Every time I learn something new, I have to work through the lessons. I really do. So here's the picture when I realize that this is what's happening. Is some people call this a clear path. And the lesson that I teach every morning, says that there's absolutely positively no way that this could be a clear path. Does that make sense, everybody? The small triggers are through and the large triggers are not. But what happens when you're smart enough to post in the room, Gino, is we talk about this every day that you make this mistake. And I don't care if you make this mistake every day for the next 100 years, guys. If I'm alive, I'm going to help you with it. But because of the momentum and because of the termination condition up here, they're calling this a clear path. And we Andy, we regroup and we say, hey, wait a minute. That's not a clear path. That's a 50-50, which means that it's just not perfect. And then I see somebody go, well, here's my good top, or Andy, where's your picture? Here's my good bottom. And what you guys are doing is you're giving me the opportunity just to say to you, hey, man, in order for that to be a good top or bottom, it has to be a no triggers through termination condition. And what we have here is just a loss of momentum. I have a pivot with a loss of momentum. And the only way that this divergence ever becomes a good top is if price reaches it and then the triggers come down and it reverses. So you get this little bit of clarity by posting in the room. And then the other most common one is people call this odds favorable momentum. Well, Mark, look, the one line is outside and then it opens up the door. No, that's your best look. That's your odds favorable momentum. So what we do in the beginning is we get so excited about the trades that we begin speaking in half-truths to ourselves. We start saying this 50-50 is in fact a clear path. And we start saying that, well, I can take this 50-50 because this was a good top, but it wasn't. And I can hope this breaks with odds favorable momentum when my odds favorable momentum ended all the way back here. So if you're doing this, you're totally normal. If you're doing this, welcome to the process. But if you're doing this and you're not posting in the room, you are literally setting the shotgun over your big toe and you're hurting yourself. So, Andy, what we have is a termination to a termination. And now what you're looking at is a breakout here. You're looking at momentum and you're looking at the clear path. And the one thing that you did is you waited for a little pullback, but you're on the wrong side of the momentum phase. But you were smart enough to manage out at divergence and you didn't lose any money on it. So you let this odds favorable momentum help you make a decision here. I love it. It's a great trade. And you put 4 divergences, but the trigger's strong down on the large chart regardless. So my rules aren't met, but to hell with it, I'm breaking my rules anyway. That's what that translates to. Took a short trade and there were no pullbacks because the areas were above the large triggers. So once again, I'm just saying, hey, my rules aren't met, but I'm going to take the trade anyway. Managed to make one target and stopped out as I managed to avoid losses and got stopped out second target. But look at that blue fib right at 2091.8. That was on the very edge of the small chart. So that was your fib update. So Andy, do you see how the language in your annotation, where you knew that you were breaking your rules, but you validated it. You knew you were breaking your rules, but you justified it. My rules aren't met, but. And my rules aren't met, but still, regardless. And I'm not saying that you're wrong for doing that. But what I am saying is that you're justifying breaking your rules because you want to be in a trade. So these divergences, when the small and the large get below this divergence, the count resets. It's the same idea with areas. When the small and the large get below the area is no longer a problem. Andy, when the small and the large get below the divergence, it's no longer a problem. And then what that blue fib coming together is it's just a fib update. That is, yours is 9 o'clock. I'm assuming your charts are on Central Time. That's your 10 a.m. Nexgen server fib update, and that's the first line of a new blue fib. And you'll see it on the small chart first. So it's just a momentum trade with a clear path. I love it. And the fact that you got out when it didn't continue, I love that too. And Andy, it's a great trade. Your clock is Eastern? Then, oh, that's not a blue fib. That's the arrow from your exit. That's not a blue fib. That's your arrow from the exit. But there's a lot of great information in here, right? So now from one picture, we've talked about good tops and bottoms. From one picture, we talked about clear paths. From one picture, we talk about breaking our rules and being okay breaking our rules. Trading our chart read rather than our rules. And Andy, I don't disagree with the trade. I like it. And I think the management was solid on it. But I do like to point out that you had an aggressive willingness to break your rules, so much so that you wrote it a couple times. All right, Zorro, you get in with odds favorable momentum, and you exit at a fib when the small triggers return. That's all I can gather out of this one, looking at a 21 range. But does that sound about right? You let it break the blue fib and entered, and then you didn't get out till way down there. Trading with direction, trading with momentum, exiting at areas when the triggers return. It's hard to argue with it. I don't have a lot of context, but even here where you held it, you had odds favorable momentum. And then here at the fib, you have odds favorable momentum, odds favorable momentum, odds favorable momentum. But here at the fib, the small return. And do you see how you're withholding a lot of information from me, though? I don't know what your large chart looked like, and I don't know what your small chart looked like. All I'm looking at is a range chart. And this is where writing on your chart, telling me what it is that you're looking at helps. But my chart reading says that you're trading with direction from a termination with momentum, and you got out at a big blue line with a loss of momentum, and that's freaking brilliant. There's nothing on this chart that I can argue. I just don't have the whole picture. But on this one chart, you appear to be trading with all the advantages. Then JW, we talked about this one. Full rock star, right? Termination, full reversal, odds favorable. This area is more likely to break because of this termination. Guys, look at his trigger lines. Look at the strength on his large chart coming from a termination. Look at the strength on his small chart. Low risk, easy, easy, easy. And Andy, I pointed out not to make you feel bad about your annotations. I pointed out because what you're going to find that is if you focus on being truthful with your annotations, you're going to have the opportunity to get more out of what you're doing. And then Bob, again, Bob, I know that you're feeling comfortable and confident right now, but show me your large chart. Tell me why you're doing this at 3:17 in the afternoon when the markets are closing, unless that is Eastern time. But it looks like the perfect short, and I don't know why you got out, and I can't coach you to hold longer because I don't know what the large chart said. And it looks like a beautiful long, but I can't coach you on whether or not exiting was appropriate because I can't see it. I don't know. One picture, two parts. I see you. So you had a termination, everything rolled odds favorable momentum, and that's what got you down. So Paul, with all that momentum, do you feel like your exit might have been just a tad early? And if I'm not mistaken, Zorro, this is your trade as well. And then Paul, absolutely beautiful termination, odds favorable. You took the pullback and you made money. All right. Hard to tell on that one. It all makes sense when the large chart comes in. And Zorro, that was your short. That's what your large chart looked like when you took that trade. Beautiful trading, gentlemen. Beautiful trading. Effortless, with the flow, nothing in the way, all the momentum. Telling yourself, I don't want to work hard. I want to work smart. Nice job. All right, Paul. 50-50. One divergence. You take the entry. Odds favorable. I like it. And now we're at a 50-50 at a pivot stop out. No reason to lose money. I like the way you did it. John's momentum rules would have held through that. Just not there yet. Just a quick winner. And that's it right there. Momentum for the win, right, Paul? And guys, you're going to incorporate more charts, and it takes a while to trust them. It really does. And then Paul's probably running the kids right now. I want you guys to see something that my brother wrote to me today, because I told you guys that that he was teaching me this new look. I'm going to take a picture of his picture. I've incorporated another chart into my trading. And even John says, you got to practice on it. You got to practice on it. You got to practice on it. So as you start learning new charts, guys, remember that the learning process starts over. When you add another trade, when you add another chart, you've got to go back through your checklists. You have to go back through everything that you're looking at. All right, Andy. 50-50. It was a good top, and it was a good bottom. So this good bottom, Andy, lasts right up to the good top, and then we just reset. Small's above the large. The large haven't broken yet. No divergence is your best entry. One divergence is your second best entry. Two divergences makes it worse. And then if you remember this one, this ended up printing like 5 of them, and the market pushed down for a little, and then it headed back up. But this is a good one. Mid-band with a large trigger is a full bar away is a termination condition, isn't it? Andy, are you with me in here? And a termination that reverses the market is pretty awesome. And then when it creates momentum, it's pretty cool. So that 50-50 with one divergence works pretty easy. And you're able to capitalize. You're able to make that money. Andy, that's a great trade, man. And then not staying committed to it when everything changed, that's where the victory comes in. It's a beautiful chart read. It's an awesome entry. It's great management. And that's it. When it's not perfect, manage aggressively. Wonderful work. And then, Rob, we have momentum shorts are headed down. Please clarify we have a pullback outside of the large triggers, but to a Fibonacci level, so that's not a trade. So one thing that you have to do, Rob, is you have to tell me what the heck you're looking at. Where are you wondering? Are you wondering up here or here or here into the termination? 87, 73, 487 isn't even on this chart. This is 73.75. Nope, 487. Okay, so we're talking about this area right here. Odds favorable and a clear path, right? What market is this, Rob? I'm going to show you something kind of cool, and you're going to dig this. I'm going to make some skinny little arrows real quick. Do you see your large triggers right here, wide, angled in the direction of the trend? So Rob, there's something missing on your small chart. Synthetic triggers, wide, angled in the direction of the trend. If you had some synthetic triggers here, no, this is definitely not crude oil. Oh, it's Bitcoin. There it is. But if you had synthetic triggers on your small chart, that pretty much would have been a pullback to a mid-band inside of synthetic triggers, wouldn't it? Do you see it, Rob? So, guys, if you're going to try to trade, no, okay means Mark, shut up. I don't want to hear it. If you're going to trade, the rules, if you're going to trade the rules, make sure that your chart's right. And John has Bitcoin. John should have Bitcoin workspaces built, but Rob, it's a beautiful read. It's a perfect trade. Everything is freaking outstanding. And the coolest part about it, Rob, is it would have looked even better with synthetic triggers on that chart. Right on. Okay, that's fair. Then you get a pass, brother. Synthetic triggers would have made that even easier to take, without a doubt. But it's a perfect read, man. It is the perfect read. And it's the perfect look on the large chart. And with those synthetics, it is 100% the most beautiful look you could ever hope for, especially because, look, there's no divergence, right? I love it. Rob, I love this look. I love this trade. And just what you did there is you have just kind of verified and validated that these patterns work on any time frame, guys. They work on any market. It doesn't have to be crude oil in the S&P for the rest of your life. All right, Gino. No odds favorable momentum. However, there's that key word. Rules not met. However, this look on the large often continues. One small fib, which didn't look like it was significant, entered at an area and managed out. So, no momentum, right? You said it. You said that there wasn't momentum. That's rule number one. Divergence verifies momentum, or no momentum. You did have an area. Gino, did you notice that your small triggers were on the wrong side of everything? And man, that's a glitch for sure. You need to refresh your software. But I love this. I didn't have the best momentum, but I had a clear path and I had an entry area. So Gino, what kind of trade is this? Would you call this high probability trend trade? Or would you call this a medium probability trend trade because there is an issue that exists? And I asked this question, and guys, anyone can answer this. I don't have momentum, but I do have a clear path, without a doubt. And I also have an area for entry. And Gino, I really like it, to be honest with you. It's just a medium probability trend trade, which means that if you're willing to take this trade, you have to manage a little assertively. So Gino, check it out. You get in. I dig it. But you do need to refresh. You're having problems on here. And then, and this is the NASDAQ too, and these small triggers may have been against you. So Gino, I want to show you one more pattern real quick, and this is for everybody as you're working on management. Let me pull it up for you real quick. Dun, dun, dun. Dun, 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 dun. All right, guys, this is a pretty big one for you guys working on your management. A second lower divergence is a good reason to exit. A second higher divergence is a solid reason to exit. Whoops. And then if you get another signal, take the trade. Second lower divergence, good reason to exit. If you get another signal, right, it's not fighting anything, take the trade. So what you did here, Gino, and this is pretty cool. Let me figure out how to close this out real quick. Is I love the first entry, man. That's a beautiful medium probability trend trade. And having your small triggers where they're supposed to be would have helped a lot, because what happens is you get the second higher divergence and maybe you're like, all right, I'm going to get out of this one. And then eventually your small triggers roll, you get a close on the correct side. And here you can take advantage of that move. It does exactly what you expected it to do, but it dances a little bit. And being on the wrong side of the small triggers keeps you patient. And then getting to the right side when they come back down allows you to capitalize your great chart read over here. Does your chart still look like this, or has it changed back? You've got to reload historical data. If your small triggers ever, like if your chart ever looks like it's way out of place, guys, it's probably way out of place. Reload it. All right, Andy, have fun at the dentist. Okay. Grant, are you in here with me? You're welcome, Gino. Hey, chart read is, dude, your chart read's perfect. All right, Grant. So let me read it all here. Saw the large green chart as it pulled back on a downward market. Since it didn't break resistance in midband, it might keep going. So you're saying terminations for the win. And then, Grant, did you notice that you also had the gap theory in place there, which just kind of reinforced the idea that longs weren't going to work? And then you go short. I'm trying to figure out where you went short. You went short at the midband. And we're right here now. So we're a 50-50 trade, right, Grant? Waited for a pullback on the large chart. We're smalls through, large above. Divergence means that it may push higher, and it did, right to the pivot stop out. And then it comes down, and a second higher divergence says, be careful, we're coming back up. And then it closes below, and it continues down. And that divergence low is a great look to exit. So I don't disagree with the first entry, Grant. But do you notice how you're larger down here and your synthetics are way up here? So you're in at the best spot. And those small triggers are way below, which is pretty cool. When they start coming up, you have to decide how much you're willing to keep on that trade. Because it never, there's your reversal bar right there, directly into the smalls. It's surprising that you didn't get stopped out. And then there's your reversal bar to give you a close on the correct side. There's your proper stop. You had to fight it a little bit of heat on a 50-50 with divergence. It made you sweat, but you held on. And then, of course, right here, great spot for an add-on if you're going to add on. It's a nice trade, Grant. It's a great read, and it's awesome patience not going long. And it's a great look-in entry. It really was. And it just made you sweat for a little bit because the path wasn't clear. You got caught up in that fight between buyers and sellers. And then Paul, weak triggers, 2 divergences. You're like, you know what? Oh, 1, 2, 3, 4. They just keep going down. No momentum. You're like, I sure hope the midband holds. And it did. You got paid. Right on. So Grant, the one thing that I always ask myself, you'd have to be on the other side, right? So 93-ish, 93.1, 93.2, at least be on the right side, a little protection. Is it worth $250 a contract on a 50-50 with divergence? That's the one question that I would want you to ask yourself. I don't disagree with the trade, not at all, especially where it's coming from. But is it worth $500 worth of risk? So it's okay sometimes to say, you know what, I'm going to insist because it's not perfect. I'm going to insist because it's split triggers. I'm going to insist on a reversal bar, and then I'll take the trade. And then when you do that, you notice how strong these are up. So then you say, well, no, you know what? I'm going to insist on the close on the correct side because there's some problems on the chart. And then at least you get to the business end of it. I hope that makes sense. And then guys, once again, I'll never tell you how to trade. It's not my job. But weak triggers, multiple divergences, weak triggers, nothing in the area, wrong side of everything, way outside of the outer bands. That's a tough trade, Paul. I'm glad you got first profits on it. All right, Haji. Talk myself into this trade because of pattern of bouncing off fib, even though large triggers had been big gap between them. Ugly and not surprised you were stopped out. Don't be mad at yourself. Haji, the only person allowed to be mad at traders in this room is me, and it hasn't happened yet. Don't waste energy beating yourself up if you make a mistake. So let's go back to the very basic rules. No matter what the large chart says, Haji, what happened on your small chart? Do you see it? Does anybody see? O divergence. 1, 2, 3. Fourth one's even lower. And look at your entry. And let's go back to, because I know that you got this lesson, Haji. You're on the wrong side of momentum, aren't you? 4 divergences, area's not broken, wrong side of momentum. The 50-50, you're absolutely right. The 50-50 look is a good look, man. That's a lot of momentum cranking through. But this is where your small chart saves your bacon. This is where your small chart says, all right, Haji, go. But you didn't believe it. And then it says, I'm going to give you another shot. But you still weren't ready. And then it said, you know what? It's going to kind of suck, but if you really want it, I'm going to give it to you. And you were grabbing coffee. And then it said, you know what, Haji, the party's over. Don't do it. And you still, I don't know, maybe scrolling through Instagram, checking out pictures of race cars. And then it said, all right, you know what, Haji, I gave you 4 chances, but now the party's over. Let me print a lower divergence just to make sure you don't do anything silly. And you said, oh, wait, that was a trade. Replace Haji with Mark, and you have my life as a new trader. I missed it. I missed it again. I missed it again. You know what? Let me try it after everything's changed. And this is pretty normal. It gave you a best entry. It gave you a second best entry. It even gave you a this kind of sucks, but it's still an entry. And then it went party over on it, Haji. And guys, remember, I encourage you guys, if you have questions about the lessons that come off of someone else's chart, it's okay to ask in the room. It doesn't have to be your trade for there to be a lesson for you. Little bit. But do you see how, and let me do this. So Haji, here's a good deal. This is your annotation, right? Do you want to know how to avoid it tomorrow or later today? I need you to do this. And guys, this is so, so, so important. Don't just be okay. Not even that. I think that you did a pretty good job on it. I want you to just take the same picture, and I want you to put 3 divergence is a term. This killed it. I fought the momentum phase of the smalls. This killed it. Lower divergence. Killed it. And I don't want you to just be okay with listening to me in class, right? So Haji, if you take this, and I'll drop it in the room for you. You know what? I don't want to. I want you to go through and type on it, because if I type it out, you're not going to get the lesson. You type it out. It's going to stick. And then I'm going to share the link, and I'm going to go to my spreadsheet. I know, right? What a pain in the butt. And I'm going to drop it into the trades that I took today. And guys, this is how you avoid this one. And Gina, when we look at your chart, I want you doing this too. I want you to call this 50-50 loser. And loser's not a bad word, guys. It's a lesson. And I was nervous because I knew that it wasn't a clear path. And my top was good, though. I liked it. My 13-2 triggers were strong. Life is good. My 5-1 had 3 divergences against it. And I lost. And I lost. And then Mark said, small chart, divergence could have kept me out. So now when you go back tomorrow and you look at the picture, you've got your feedback as well on there. And Haji, I'll post it in the room, but I did that because I want you guys to realize that me holding your hand and keeping you from having to go through the process, it doesn't help you. It doesn't serve you, not even a little bit. We'll have the conversations, but if you guys go back and you have to type it out, guys, my problem was termination conditions. So much so that when I saw odds favorable momentum going into an area, I went long anyway. I did it anyway. So what I had to do, and Haji, this is what saved me. True story. When the market looked like this and I was absolutely chomping at the bit for a long trade because I saw a good bottom, I had to, and this is, my brother made me do this. He goes, take a picture before you take the trade and talk through the rules for a termination condition in your head real quick. Price reached the area, triggers didn't break, and what it did is it kept me from taking that long trade, and it was pretty outstanding how effective that was. Just speaking in terms of advantages, and what it did is it kept me out of the long. There's 3 divergences, but because it was a termination condition, it got me thinking about the short right about here, and because I knew it was coming from a strong top, I felt pretty good about the short here as well, and it paid huge dividends for me. Does that make sense, everybody? All I had to do was talk about where I'm coming from to set me up for success. So Haji, a 50-50 trade after a termination that reverses the market is more likely to win. Even with one divergence, these strong triggers, and there's a tiny little window for opportunity where I had to wait for the close on the correct side, I'm willing to take this trade with the one divergence because of what happened up here. And you just go through this process every day. You go through it every day, and you see the same stupid stuff, and you see the same darn patterns, and eventually you're just like, oh, wait a minute. Everything just clicked, and life is good. All right, Gino, I want you to do the exact same thing that Haji just did. Pivot stop out. I like it. It's a good bottom. 50-50, right? 50-50 with divergence. And then Haji, or I'm sorry, not Haji, Gino. I'm going to tell you again, 100%. On any other market, I love your entry because of the termination, because of the momentum, because of the potential to break. But for whatever reason, you guys don't want to believe me that strong triggers against you on the NASDAQ will wipe your butt out. I don't know why you guys are so resistant to this. I blew out a dozen Apex accounts learning this lesson for you. Strong triggers, strong small triggers on the smaller chart on the NASDAQ will run you over. They will torment you. And if you just wait to get to the right side of things, at least you have a fighting chance. So, Gino, your job is to go back and re-annotate that chart. It was a great setup, but I fought the small triggers, and maybe you won't fight them tomorrow. Maybe you won't fight them later today. Guys, 50-50s are not evil trades. You just have to figure out what gives you the advantage. Paul, I just can't even figure out what you're doing today. I mean, I'm glad you're making money. You are working hard, Paul. So if you catch this on the recording later, you're working hard, brother. You are taking chances, and just to hell with momentum is written on a piece of paper on your desk. To hell with areas inside of favorable large triggers. I'm Paul, and the market will bend to my will. And then the flip side of that is at least you're getting paid quick on them. There we go. Your entry was at CAV 82. 82. So you have the best momentum, all the potential to break. Small triggers break and it snaps back. You get it on the way up and you get out of trouble. CAV, it's a thing of beauty. There is a tear in my eye. You have, CAV, you've turned a corner, brother. You have turned a corner. I hope it feels like you've turned a corner. Like, I hope that you're recognizing that you are 100% capable, 100% of getting the best of the best. Momentum phase for the win again. JW, tell you guys, there's that lesson. And then, counter trend, white bar, reversal shouldn't work. When you've got weak honking triggers and a 50-50, that divergence lets Ron know that he can probably capitalize on the pullback. Ron, I hate that I like this trade so much. Cav, you're doing awesome. But can we point out something that helps Ron's trade here? Which side of the small triggers is he on? Which side of the small triggers is he on? Do you notice that he's not fighting the momentum phase? He's let it end. And then he's just taking the pullback. Guys, it's absolute genius. It's beautiful trading. But if you're not so comfortable with your reads, you're not going to catch that. It's going to whip your butt every time. And then, of course, Ron says, I invented this trade with momentum. Clear it. Momentum phase. Get out. Yeah, that's the cult trade. Guys, this is what started it all. For a lot of you guys, you should, when Christmas comes, go to Omaha Steaks and make sure that Ron gets a box. He gave you guys some absolute gold. And he labeled his charts and told you his rules so that you guys could eventually do what he does as soon as you learn to wait for momentum and a clear path. Birth of a chili dog. All right, so Grant, strong momentum to the upside. Mid-band at support and turn green. Some resistance, fib close, but strong momentum. Entered on the pullback to the support line. There you go. Ron, it's just, Grant, it's just a momentum trade. Termination, reversal, odds favorable, haven't reached the next line, and you have the potential to break the previous. So on the small chart, you let it break and pull back to support and get out of trouble. Grant, it's beautiful. What a great trade. Not a home run trade, right? Let's make a little money in GTFO. Then Joel, picture perfect. Can't do any better than that. And then Cav, termination. At least you get to the right side of the small triggers. Termination. You let it get to the other side. That's a tough sit through with the smalls still up. I like that. Can I show you something, Cav? And I'm not... And Grant, well, I guess what I'm saying is you don't have to, right? Look at where your small triggers are compared to the area that you're hoping breaks. Do you see it? And then look at where your small triggers are compared to the area that you're hoping breaks. They've come back up. You're not sure if that's going to be a divergence or a bounce because your small triggers are still up. This was a tough one to catch with just 2 charts. But you have divergence. Your large chart doesn't say that it's over, right? Your large chart triggers are still above everything. Your small triggers are angling up, and you haven't really given this pivot stop out time to form. I know why you did what you did. When those large triggers are still up, when the small triggers are still up, it's just less likely to work. These are the ones that you get run over on when they decide to go up. And honestly, you never got an entry here. But when the large roll, life is easier. And there's your little momentum stab back right at your first target. Yeah. 3 divergences helps for sure. But again, there wasn't a pullback. That was you getting to the other side and getting in before the bar ever even closed. That is anticipatory, but really well done. And then Andy, I know you're mobile. Can't see the bottom. I can't tell if it's actually good. And then that's not a good bottom because it's not a termination condition that reverses the market. But what it is support that held with all the triggers above it and the large triggers never got to roll. And then looked like it was waxing stronger, but not quite there. You got stopped out. So you didn't trade from an area. You had no areas inside of favorable large triggers, and you didn't have odds favorable momentum, and you had divergence. So we broke rules 1 and 3. And that's what came and got you, Andy. Roku. And Cav, you do know that just because I pointed out doesn't mean that I think there was something wrong with your trade. I just like to point out little things. Maybe it helps a little bit. All right, momentum trade above, small triggers are above the large triggers. I'm not sure where you got in or out, Roku. I'd love little arrows. Let me know where you did it. Because this one says the smalls are above. Pivot does not lead to momentum. It was just a loss of momentum. Don't think about it as what you did wrong, Cav. It's how well you're reading the charts. That's getting you into these trades. But it's a constant refinement process. I was notorious for getting in early, and that's why I recognize it, because I recognize the patterns on your charts that robbed results from me on my charts, just on my own patience. And this is one of my favorite pictures, and I'm going to share this with you guys. This is the might versus have picture. And you'll see it on a range chart. You'll see it on your small chart where you see the termination. You see a couple divergences. You know that in your head, you're like, man, this is a great look for a top. And it's once those large triggers roll that it really gets easy. Once those large triggers stop having momentum, the smalls are below it, that's when shorts get easier. And it's that little piece of patience that helps out a lot. So you got in above the 81 fib, which is, so you're in, okay, right here with the great momentum trading the breakout with the odds favorable. And then you rode it all the way to trouble. Absolutely beautiful, Roku. 100%. Absolutely beautiful. Momentum up, clear the area, get in somewhere above the fib, and get out at trouble. Outstanding. Outstanding. And guys, you are keeping me busy today. I love it. But I think that's it. I think that we made it to the end of the pictures. Good job, everybody. Did you learn anything? Let's go to the live market. What does 3 divergences tell me, guys? 3 divergences in the same price range. Notice that from those 3 divergences, look at the fight that happens at the key area. Weak triggers set it off. It comes all the way up. The triggers don't follow. All the way down, all the way up, all the way down. Does this right here almost look... Let's go to it. It almost looks like a little different. But doesn't it look like a ridiculous fight right by key areas between the buyers and sellers? Doesn't it look like the kind of thing that you don't have to be caught in if you're waiting for momentum, if you're waiting for a clear path? Right? And then when the termination creates the reversal and you have a 50-50, doesn't it just get easy? And of course we hit our area, so I'll go break even. But do you see how that works, NASDAQ traders? If you were waiting for the close on the correct side, it took you right to your target. I was real slow. I was trying to look cool for you guys. But that's a termination. That's a full reversal. That's a 50-50 on a divergence high. Only one. But I didn't fight the small triggers. I wait for the right side, and I just couldn't get my stop in place soon enough. But even that wonky little trade, guys, that was $160 a contract directly into resistance. But Dwight, this is why we don't trade a 5-1 on the NASDAQ, because it's hard to catch that stuff on a 5-1. And then Cav, you're in at 82, right at the 1-to-1s on a 50-50 with divergence. And again, Cav, I like it. You hit your target and you gave most of it back on the second contract. This is where you got to know what you're up against, right? Directly into a fib pivot stop out. I've got one target right at the red fib. I got the other one just below that once it hits. And it happened fast. But fighting these small triggers, guys. Because your entry was the mid band. Your entry was the 1-to-1. I hate to sit through stuff. I'd rather get in. I'd rather sell it, pay a little. Nice trade, Cav. I forgot that my Ninja crashed, so I'm going to open up crude oil and we'll see what's going on over there. Guys, one of the coolest things about what we do is there's a million lessons in everything that we do. And Cav, you're more confident getting in at the areas, and that comes from trust. I'm scared of the NASDAQ. I really am. I do my best to not fight anything on the NASDAQ. Whew, it's crazy. Crazy. Is crude oil really slow? I'm loading up right now. Divergence, 50-50. It did pull back, but it's an ugly look. Some days it is, right? Some days it isn't. Some days it's fast. Some days it's slow. Some days it's money. Some days it's just pain and strife. So, Andy, have a good one. And Andy, you can do this. And you are seeing reality. You're seeing it really well. And this is where it goes back, and I've said this to about 10 people in the last 4 days. The better you get at reading charts, the less likely you are to follow your rules in the beginning. The more, Ron, enjoy the beach. Yeah, we're like in the 75, going to be 80 today here, but I will not be outside. The better you get at chart reads, the more likely you are to break rules. And anybody that's good at this will back me on this. Bob, when you started recognizing where the market was likely to continue, where it was likely to go, where it was likely to stop, you started making your decisions on your reads. A lot of people do that. It's awesome, isn't it? Great day, Cav. Thank you. Have an awesome one. Michelle, I would wager to say that you did the same thing. When you started getting really comfortable with your chart reads, it was more difficult to follow your rules because you started forming opinions about where the market was likely to continue and where the market was likely to go and where it was likely to stop. And each and every person in this room, I guarantee that you've gone through that. And if you haven't, you probably will. Because chart reading is what we do, guys. Chart reading lets us know that this short was a pretty good one, right? Um, so what happens, and it's okay to try things, right? It's okay, man. I think that this is a short, right? So if I'm on my Apex account, that's not my short because it doesn't fit my rules. But if I'm learning a new short, I'm going to take it, I'm going to annotate it, I'm going to drop it in the room, and I'm going to go, hey, Mark, I've been watching this. When everything breaks through and pulls right back, even though it's not the best look here, am I doing this right? Am I looking at it right? And I'm going to be like, man, yeah, that's a pretty good one. Let's talk about all the advantages. Let's talk about the disadvantages. So I don't want you to get dejected or feel bad if you find yourself breaking your rules. What I do want you to do is post in the room. Let me hold you accountable. Until you learn how to hold yourself accountable, let me hold you accountable. But while I'm doing that, while we're developing that accountability, self-policed, make sure that this is what you're holding yourself to, right? Make sure if this is your plan, make sure that this is your plan. And guys, even more so, if you're not trading the KISS plan, here's one that's fill in the blanks for you. So Ron has a momentum style trade. And Ron has a very clear set of rules. And it starts with price clears the area on the large chart with odds favorable momentum. And this is the beginning of his checklist. And it's not your rules. These were his rules. And then he has to say odds favorable momentum on the small chart with a clear path as well. And then he says, pull back on small, then back below bottom of previous bar. So what he's doing is he's creating this look. He's creating this checklist. He's making his own checklist, his own policing to get him into these trades. And then what you'll find, guys, and he's not even here, but I'm going to use him as an example because it really is outstanding how consistent he is. When he posts in the room, what you'll find is that not only do his pictures match his rules, but damn near every trade he takes, his pictures match his rules. So price cleared the previous area. The price bar clears it with odds favorable momentum. The market pulls down, and then when it gets back up above the bottom of that bar, he enters the trade. And he only takes 10 ticks and then one for commission. And that's it. No matter what happens, that's his trade. And I think what happens a lot of the time, you guys that are going outside, is you say, I'm going to add another chart, but you don't do the work. You don't take the pictures. You don't study the patterns. You say, I'm going to add another market, but you don't do the work. You don't study the patterns. You don't ask for help. So if you're going to add a trade, I support it. If you're going to add a market, I support it. But if you're a crude oil trader and you get into the NASDAQ, guys, I'm going to tell you right now, if you try to trade it like crude oil, it's going to whip the ever-loving crap out of you 9 ways to Sunday. If you try to trade a 13.2 and a 5.1 on the NASDAQ, it's going to whipsaw you into submission. So make sure that your plan is appropriate for what you're doing. Make sure that your management lines up with the trade that you're taking. Make sure that the rules you're following are for the trade that you're taking. A lot of times I see people taking high probability trend trade entries when it's a medium probability trade. I see people taking momentum style trades when there's not momentum, and they type it right on their chart. It's a momentum trade. Well, momentum trades take momentum, don't they? So if you're on the momentum phase side, it's easy. If you're taking a momentum trade against it, it becomes difficult. If you're on the momentum phase side, it becomes easy. If you're on the momentum phase against it, that 1-to-1 just whooped you, right? And it pushed all the way up higher. So understand what you're trading. Keep asking questions, guys. I've traded probably every market that you've traded. I've seen probably every pattern that you're going to see. And I've got, I don't know, maybe 12,000 pictures at this point in my life. From study, from repetition, from spreadsheets, from working with you guys. So give me a chance, right? And look at that. It was a 50-50 with 2 divergences. And if you went short, you're not allowed to be surprised that you lost. That's all I'm saying. You're not allowed to be surprised that you lost. If you fought the small triggers to do it, you don't have permission to be surprised that you lost. It just means that you need to study these patterns a little bit more so that you can eliminate those losers. Because that's really the goal, guys. It's like golf. You're never going to hit perfect shots all the time. The idea is to miss less, right? Is to miss closer to the hole. And this is how we're going to end the day, with me flapping my gums. If I wake up, and I'm going to show you guys, and you're probably going to identify with this. If I wake up and the first thing I do is win $300, I feel good, right? And then I take another trade and I break even and I make I'm up $400 on the day. And I'm feeling pretty solid. I'm like, man, look at me go. And then I take another perfect trend trade because I'm so focused. And I make another $300 and I'm up $700 on high probability trend trades with easy management. And guys, I am 2 hours, 3 trades, up $700. My daily goal is only $500, but let's be honest. If I'm up $700, I'm kind of a big deal, right? People know me. They want to be me. So I take a 50-50 with 2 divergences, and I give 250 of that back. And now I'm at $450, and I broke my rules. But I'm so damn smart, I was convinced, absolutely convinced, that I'm the smartest man in the world, so I took that 50-50 after the 3rd divergence, and I lost another 250. And now I'm down to 200 because I broke my rules again with an opinion. And then I get scared. I'm starting to lose money, so I jump in like Ron does, but the rules aren't met. And now I'm negative 100, and I'm telling myself I can just get it back with 1 trade. So I break the rules again, and I'm down 400. And I break the rules again, and I'm down 575. And I break the rules again, just trying to get that money back, and I'm down 800. Has anyone else done this? Does this sound familiar to anybody? Where you start off, and you're so focused on the rules that it feels easy. And then right where your rules say, it's time to stop trading. It's time to shut it down, to go do something else, to go play golf, to go play football, Jen, to go fishing, to go to the gym, to fix lunch, to go walk on the beach with someone that makes you giggle, whatever. Guys, have goals in there. And I'll tell you what, this is one of the biggest things that I see, is people reaching their daily goal and then giving it all back. Reaching their daily goal and end up in a losing day. because they begin to feel invincible. They like that dopamine kick. It's like, oh man. And guys, I've done this. I've done this. I've had an Apex account at $2,700. And I've let this spiral out until it's blown out. I've done this. So how do you avoid that? The first thing is insist. Either my rules are met or my rules are not met. And no matter what I think, I only trade when my rules are met. So as you're learning the trades, let me help you with that. As you're learning the rules, let me help you with that. Here's the second thing. If I lose 500 a contract or whatever your number is, I stop no matter what. I have to get rid of the Superman complex. If I hit my goal, I stop. I have to stop feeling invincible. Some people say, if I hit my goal, trade until a loser. And I see this a lot. I have a $500 goal. I'll trade until I take a loser, and then I take a loser and I'm at $300, and I go, shit, I have to hit my goal again. And then I blow out the day. So know what you're doing, guys. Have a plan for entry. Have a plan for exit. Have a plan for stop losses. Have a plan for profits. And I can tell you right now that my daily goal is $500. My last trade today put me at $785. I'm done. I'm not trading. When I'm done with you guys, I'm shutting down. I'm going to go play catch with my dog and cook some lunch and have a good time. It's hard to do that, but you can do that. So we do this every day. We're going to keep talking about rules. We're going to keep adhering to the rules. We're going to focus on the patterns that bring us success. Guys, truth in advertising, making sure that when you're annotating your charts, you're not annotating what you wish happened. You're annotating what actually happened. And then going back and studying those the next day, making sure that you are, in fact, taking the best